All right. Welcome to Ask the Trader. Just waiting for people to join. Welcome to Ask the Trader. Just waiting for more people to join. All right, we got one. Just waiting for people to join. All right. Just waiting for more people to join. I'm sharing this to all of my other groups. And as soon as someone sends me a message saying that they can hear me clearly, I will go ahead and start. So welcome to Ask the Trader. Welcome. Happy New Year. All right, so let me go ahead and get started. Let me go into comments real quick and see if you guys can hear me clearly. If you can hear me clearly, please leave a message in comments, and then I'll go ahead and start. All right. So it seems that I am loud and clear. So welcome to Ask the Trader. My name is Joel Harrison. I am a full-time day trader. I'm an expert in stocks, options, futures, and cryptocurrency. I have over 15 years and over 30,000 hours of trading and investing experience. And anything that we talk about today are going to be the opinions of Joel Harrison. So the format for Ask the Trader is I want you to leave me a stock or a question in the comment section. All right. So this is being broadcasted over several social media platforms. So whatever platform you're using, if you're listening in, especially if it's not a group, if you're on YouTube or if you're on LinkedIn or if you're on Facebook, go into the comment section, type in your stock. Please type one stock. All right, give me one stock that I want to analyze, and then kind of give me an idea if it's a day trade or if it's an investment, and make sure that it's at least $1 billion in market cap. All right, if you don't know what market cap is, you're going to learn about it today. All right, type that in the comment section. If you have any questions, try not to be so long-winded with the questions because I'm going to try to get to everybody's questions today. All right, everybody's stock and everybody's question. That's my thing. I'll keep going on and on and on. Now I'm going to start at the top. So it's first come, first serve basis. So I'm going to go through the questions and the stocks from the top of the comment section. All right. And I'm going to go all the way down. All right. So if you come in an hour and a half late, you probably are not going to get that question answered, for a minute. All right. So let me go ahead and get started. If you do want to do a consultation with me, one-on-one consultations, you can go to calendly.com/what would Joe do. They're 45-minute consultations. They are confidential, and you will have access to the recording for at least 30 days. All right. I have an app. So if you go to my app, if you're on Android or iOS device, you can go into the app, type in what would Joe do, download the app. Once you download the app, you'll have access to a couple of things, right? You'll be able to go through the app and you'll be able to go to all of my social media platforms. But you'll also be able to join a membership service. You can join the alert service, or you can join the ultimate member service where you'll have access to all of my videos and you'll be able to get the alerts. All right, I did create a GPT. We're going to use the GPT today. Now, my specialized Ask Joel GPT has my special tools on it. So I always encourage people that if you're on Chat GPT, go to explore options, pull up my Ask Joel GPT, and anything that you ask about stocks that's stock related, it will help you with my special tools. All right. So if you want access to pretty much all of my newest videos, you can go to payhip.com/what would Joe do. If you buy any videos from this particular store, you have those videos for the rest of your life. You download it, you'll be able to look at it for the rest of your life. Teach your kids, teach anyone after you, but you'll be able to hold on to those videos forever. All right. There are new and improved videos. The prices of the videos did go up now. My most popular product is going to be the Thinkorswim chart setup. I'm never going to change the price for that. All right. So I'm going to show you guys some beautiful charts today. I'm going to mix the fundamentals and the technicals. And if you want the technical side and you want your you want your charts to look as beautiful as mine, you can download this particular video. If you're interested in stocks, options, futures, crypto, you can download my other videos. All right, this is my most popular and latest video, so I made a bundle for it. So if you're interested, if you're a 9-to-5 worker and you don't have time to look at the market every minute, every hour like me, the 9-to-5 method is going to be great for you. And the 513 crossover strategy literally should have been the first strategy that you learn in all of these $20,000 and $30,000 classes that you guys are taking. So I've taken it back to the fundamentals, and that's why I'm here to teach you guys the fundamental way of looking at the market. A couple of places that you can go to find me. You can go into my insider trading group, over 30,000 members. You can go to my What Would Joe Do page, which is on YouTube and on Facebook, where you have direct access to me. And then I have my private group, which is the Ninja Trading Group. It's pretty much all of my posts. All right. Again, I talked about the ultimate membership service, which is through my app. It's $50 a month. You have access to pretty much everything. Woo! All right. That took 7 minutes. It usually takes me like 12 or 13 minutes to get through it, but I wanted to make sure that I had access, to all of you guys' questions and concerns, because that's really what's most important to me. But investing and trading is easy. You guys make it hard. Investing and trading is easy. You guys make it hard. So what I did was I created the What Would Joe Do method, not to glorify myself, but I created it so that you guys can go through a system, a checklist. And that checklist is very simple. It's what, when, where, why, and how. If you can't answer these 5 easy questions, there's no reason why you should be buying or selling whatever asset class that you're interested in. And I take you guys through the steps, right? I break down everything in its most simplistic way so that you guys can analyze and know quickly. If I get a stock tip, I know how to handle it, because the first thing I'm going to ask myself is, am I trading or investing? What is this asset that I have? When do I want to trade it? Where do I want to trade it? What platform do I want to trade it? Why am I even trading or investing in this particular asset? And then, the $1 million question, how am I going to mix the fundamentals and the technicals? And that's where I come in. So let's look at this chart. All right. This is the Trump year. So we know that, Trump just got inaugurated for the second time as president. And, a lot of us, because we don't use the charts, we don't really have the history behind, or we don't know the future of what he's going to provide for us. So, what I like to do is I'm a historian. And I'm a historian, and I'm a statistician, and I'm a scientist at heart, right? So I like to go back and see how were things when Trump was in office? Because I kind of want to get an idea of, the 4 years that he was in office, which is right here. Trump was in office from 2017 to 2021. During that time, the S&P 500 gained 68%. All right. So, if you own the S&P 500 and you had $100,000 in it, after Trump left office, that portfolio should have had about $168,000 in it. So that's a pretty decent gain over a 4-year period. You're averaging probably like, what's half of 30, half of 68 is 34, 17. You're averaging about 17% a year. while he was in office, which is a pretty decent appreciation of assets. If you could make a 68% gain in the real estate that you buy or the business that you own, that's a pretty decent gain. But I always like to see, what happened before, what happened during, and what came after. So before the Trump years were the Obama years. And Obama was in office for 8 years. So over that 8-year span, the stock market, which is the S&P 500, I always tell people the stock market or the economy is basically the S&P 500, which is the 500 largest companies that are out there. But the S&P 500 under Obama gained 182% over an 8-year period. Now that was 8 years, right? So Trump was up about 68% for 4 years. Obama was up 182% over 8 years. And Biden, the last 4 years, the market rose about 42%. So yeah, the Trump 4 years did appreciate better than the Biden years. But what do you guys notice? It didn't matter who was in office, the market went up in value. Now, what I also like to do is I don't always look at the pros, right? What are the cons, right? During the Trump years, every year wasn't an up year. During the first year of Trump, there was appreciation from 2017 to 2018. All right. But during 2018 to 2019, it was actually a down year. So imagine that, right? As pro business as Trump has been, there was actually a down year during the Trump years. And during that second year where the market dropped, if you were to go to the highs, because we did appreciate in value, and then towards the end of the year, the market dropped 20%. And then during the third year, there was appreciation. And then during the fourth year, COVID did come in and the market dropped 36%. But we still ended the year up. All right. So what does that tell us? That tells us that no matter how pro business Trump is, whether you're buying crypto or any type of business, there might be a period where the market's going to drop 20 to 30%. Now what does that mean for your pocketbook? That means that if the S&P 500, which has a beta of 1.0, drops 20 or 30%, any stocks that had a beta that was higher than 1.0, which is pretty much all the stocks that you guys trade on a daily basis, the Apples, the Amazons, the Googles, the Teslas, the Microsofts, they were probably all down. Usually if the market is down 20% because their betas are higher, and I teach that in that beta volatility video, then those stocks were probably down even more than that 20%. Or when the market was down 35%, the market, those stocks were down 40%. So you got to keep that in mind, so that if you're holding something multi-years, you have to expect that there's probably going to be a period where your favorite stock that's out there, is probably going to drop 35 to 40% under a Trump administration. Now, it doesn't mean that after the 4 years, you're still not going to be up 68%. You just got to understand that the market stair steps going up, even when you have a president that's pro-business. Even during the Obama years, even though it was up 182%, which is crazy, there were times where the market went down in value. Okay. So you guys got to understand that, right? So, I'm looking at statistics. Usually the market is bullish 4 years to every bearish 1 year. So for every 1 year that we have bad, usually the market is up 4 years, right? So 80% of the time the market is going up. 20% of the time the market is going down. And I want you guys to think about that. There might be a period where there's 8 to 10 months where the market is going down in value, but it doesn't mean that it's the end of the world. It just means that Maybe you need to go work on your golf game like I did in 2022, right? When the market started to go down in value. Maybe it's a period in time where you need to rebuild your portfolio, because if you rebuild your portfolios during the periods where the market drops, then you're able to capitalize on it for 4 to 5 years like I've done. And I was able to catch these ridiculous runs in the Nvidias and then the Apples and then the Microsofts. All right. And in the meantime, you're going to have your trades like your Sounds and your Palantirs and some of your small cap companies. But that's why you have to kind of have a plan. So I like to get ahead of, before I decide that I want to trade or invest. I kind of want to know what my goal is so I can work my way to that goal. But I also want to be realistic about what can occur during that particular period. All right, cool. So let's go ahead and look at some of you guys' stocks, because I know that this is important. I know a lot of you guys are looking at this on your phone. So you know what? I'm just going to go ahead and pull up the chart. So let's go ahead and pull up the chart real quick. And if you pull up the chart, I could blow this up a little bit so that you guys can really see what was going on during the Trump years. Okay. Up year, sideways to down. And this was the year that he was being impeached. Okay. So it's understandable. But then we rocketed back up in price. And then COVID happened. But then, we rebounded from COVID and ended the year up. Then Biden took over, continued the move to the upside. Then 2022, the market started to go down in value. That's when Biden was introducing the infrastructure bill. I remember this period because everybody just thought that the world was going to come to an end. But every single day, all they were talking about was the infrastructure bill, the infrastructure bill, the infrastructure bill. What was at the top of the infrastructure bill, right? Building, right? Semiconductors. And I kept telling you guys every other day, look, I know the semiconductor space is getting smashed, but if you hold on for the 344 days, you're going to be able to capitalize like you've never capitalized before. And for the last 2 years, all I've been doing was producing receipts from this period where I readjusted my portfolio and the market started to explode in price. All right. Now that the market is way up here, we might experience, because out of these 4 years, I'm trying to let you guys know one of these years is going to be, or 6 to 12 months is going to be a down year during the Trump period. You just got to figure out where it's going to happen. Hopefully it happens early. Well, if it happens early, that means it's either happening this year or it's going to happen next year. And I don't want you guys to give up on stocks or give up on the market, because there's going to be a period where the market goes down, because nobody is immune to it. Biden wasn't immune to it. Trump wasn't immune to it. Obama wasn't immune to it. All right. So you got to start positioning yourself. You got to know when you're trading. You got to know when you're investing. If you don't understand the technical side of the market, that's why I created the Thinkorswim chart setup. You guys need to start positioning yourself. All right. So let me go ahead and look at some of you guys' questions. But before we even get to the questions, let's dive a little bit deeper into what might happen during the Trump years. So what I like to do is I don't like to speculate. I like information, right? So the best information, or the best place that you can go to get that particular information, is going to always be ChatGPT, in my opinion. So let's go to ChatGPT. And what I love about ChatGPT is when you go to ChatGPT and you go to, let's go to my Ask Joel GPT. Close that off. When you go to ChatGPT, you can ask it like literally, guys. You remember when you had dial-up, and you remember when we finally got like cell phones, and how it revolutionized the way that we did everything. You remember your first time having access, because I was a realtor before. I used to sell real estate before navigations came out, right? So when I finally got my first Garmin navigation, it was like this big. I mean, it was a big old block that I sat on the top of my, that I kept in my car. But once I was able to get that navigation, it changed the way that I did business. That's what's happening, guys, with Chat GPT. If you're not on Chat GPT, if you ever go back to regular search, it feels like dial up because the information is so slow and it's so individual. Like I said, you just have to go to it. The GPTs that are out right now is pulling all the information from everywhere that's available and giving you an answer that's clear and concise very, very quickly. All right. So, I don't even use Google search or whatever, or Safari or whatever that's out there for searches anymore. I use GPTs, and anything that's stock related, I'm going to use my own Ask Joel GPT. But let's ask the GPT a question. Like what stocks, or let me reword it, under Trump, under Trump's, and y'all can see I'm doing this on the fly, under Trump's last administration. And you don't have to be as wordy as I am. What stocks benefited during this period? Okay. And I don't know if that was the correct question, but you can ask it just about anything. So it's going to tell us during President Donald Trump's first term, 2017 to 2021, financial services did pretty well. Why? Because there was tax reform, there was deregulation, interest rates started to go down, defense and aerospace benefited. Right. So if you're if you like those types of stocks, right, like Lockheed Martin or Raytheon, right, those were the type of stocks that did pretty well. Energy stocks did well. My favorites are Exxon and Chevron, right? Industrial and materials, private prisons. Now, I'm not really into that, but you know, but what I like about this is it's going to kind of tell you what type of stocks were doing well. So, he just created Stargate, right? So even if I was to go here and say, all right, these are the type of stocks that benefited, during his last term, what stocks are going to benefit from Trump's Stargate. Okay. And let's just see what it spits out. All right. It says that, President Donald Trump's recent announcement of the $500 billion Stargate project is a joint venture. These are the types of companies that are involved in it. So these companies should be on your radar immediately. Oracle, Nvidia, ARM, Microsoft, SoftBank, right? Network and data center companies. So you might want to go out there and research these companies like Arista Networks, Broadcom, Marvel, right? Ciena, Coherent, Lumentum, Fabrinet, Corning. So Corning creates the glasses, the glass for that. Every phone has a glass cover, right? Corning specializes in creating that for your particular device, whether it's an iPad or a phone or your computer. So these are lists of companies that you guys should start writing down. Now, what a lot of you guys will do though is you guys will get this list and you guys will do the lazy route. Y'all will go out there, you'll see the list. You might have 100,000 on the side, and then you'll start buying them today, right? Now, I already told you that there's probably going to be a period where stocks drop 20 or 30%. If these stocks have a beta higher than 1.0, chances are these stocks are probably going to drop 30 or 40% as well. So when you buy them now, you're going to feel some type of way when they start to drop, which is why I encourage you guys to learn how to buy these stocks when they're on sale. Maybe when the volatility index jumps above 20 or 30. All right. Maybe when they touch their 200-day moving average. But if you guys don't understand what that means through the charts, then you have to start getting educated on that type of stuff. So what I'm going to do is I'm going to, when I pull up you guys' stocks, I'm going to perform what I call a magic show. This magic show is going to show you guys, and I do this magic show every 2 weeks, and I always answer any and everybody's questions because I want to show you guys how easy it is to analyze a stock when you guys know what to look for. And I do it for free on purpose, right? Because I am sick of YouTube, and here's my rant coming. I'm sick of YouTube. I'm sick of other teachers taking advantage of people that don't have this type of knowledge, charging you guys 20, 30, and $40,000 for classes, and they can't outperform me. And I'm giving you guys this stuff for free. Now, why am I doing it? Because as I got older, I learned that the more I give, the more it comes back to me. And I make all of my money through trading and investing anyway. So it doesn't matter if I show you guys the secrets. And three, this is the type of business where I don't have to keep all the secrets to myself. In fact, the more people that invest in the same stuff that I'm investing in, that's how stocks go to the moon. All right. So it's, I don't want to keep it to myself. I want everybody to say, hey, Nvidia is the greatest company on the planet and take it to a $20 trillion market cap. I want everybody to be involved in Bitcoin because I own one and take it to $4 or $5 million a coin. Right. So that I can become a millionaire or I'm sorry, so I can make more millions. Right. And you can do it as well. All right. And then I don't have to worry about the hate when I start showing receipts because everybody will have money and not just me. So that's why this is why I do this. But you guys need to take the first step and start saying, all right, I'm smart, I'm intelligent. I understand that Apple and Microsoft and Google are fundamentally good companies. But if you guys don't know technically when to buy them, then you're still buying things blind. And it doesn't take 20,000 hours to learn how to do it. Stop listening to people that make things complicated. When you listen to complicated people, you're going to get complicated results. If you listen to people that break down things in its easiest way, that's when you start to understand it. So the more complicated something sounds, you probably don't want to be involved in it. The easier that it sounds, and believe me, guys, again, I'm going to show you guys a magic trick. And every single solitary stock that y'all give me today that has at least $1 billion market cap or higher, I will show you with 3 simple steps how you were able to catch the momentum of that stock and you would have been able to make money on it. And I'm going to show you guys when you would have known that it was going down in value. And it's all in all those videos that I have created for you guys at a very, 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 very affordable price. All right, cool. So let's get to you guys' questions. Let me take my mug off of this. And I don't know how long I'm going to be in this suit. Y'all know I don't like wearing, I gave up my monkey suit when I became an entrepreneur. And I told myself the only time I'm going to wear a suit is to funerals and to graduations. That's it. Funerals and graduations. All right. So this is a one-time thing. All right. So let me go ahead and get to you guys' questions. All right. So, all right. Happy Friday. Happy Friday to you as well. Anthony said, peace. Let me go ahead and pull up my charts. All right. I don't have my glasses on today, but Anthony says, hey, Joel, I got about $50. All right. I want to put it into the stock market. Give me advice on some good stocks that you would invest in and also be prepared for the beatdown this Sunday. All right, all right, all right. So if you had $50, guys, $50 can turn into $1 million if you know how to do it, right? So what I always tell people is, look, what is your goal, right? You got $50. Are you willing to lose all of those $50, or are you willing to? Do you want it to grow slow? You got a realistic. I always tell people you got to know what the answer is, so that you can know what process to go through, to get to that particular point. He asked, what are some stocks that I could buy? Well, like I said before, what is your goal? Right? My goal might be different. If it's just to make a 10% return, I'm going to have a different strategy. If I'm trying to turn that $50 into $1,000 very quickly, then I'm going to have to maybe quickly go into the options market, or quickly go into some stocks that are very speculative that can go up in price, right? But what I also like to do is I like to go to Ask Joel GPT. So even if I was to go to Joel GPT and I had $50, I always like to type like, what are the hottest stocks under $50 right now with at least $1 billion market cap? Okay. Again, I don't like to, as much as much knowledge that I have, I still like to use the GPTs to spit out some answers for me, right? So, it gave you a pretty good list to start out with, right? So it's going to give you it's going to, the GPT is going to give its list, right? It says Ford might be a good one at $10 a price, $10. Pfizer, which is a pharmaceutical company, is at 25. And Pfizer has been going down in price, so it should start to go up. But this market capitalization is important because it's telling you how large that company is. This is a $40 billion company. This is a $146 billion company. AT&T, $22. It's a $162 company. Bank of America. Now, remember when we talked about some of the companies that can benefit from a Trump administration, I also want to know the type of environment that I'm in. Certain stocks might not go up in value under a Democratic regime versus a Republican regime, right? So, because financial companies did well under Trump, especially with the rates going down in value, right? You know, I would be thinking, ooh, Bank of America, right? Carnival Cruise is on this list, right? Nokia, Valet, and then American Airlines, right? So, some of the companies that I like, they're going to be on my stock star list. If you guys came to me and asked me what are some stocks that I think can grow in value, I'm going to always push you guys into cryptocurrency. All right. With the new crypto president, the sky is the limit for crypto. So if you have a little bit of money that you need to grow really, really fast, I would really be considering the cryptocurrency market. I also like fast casual companies. So apparently you're getting a boom, especially with GL. Think about it. You got the GLP drugs that are out. So if you don't know what GLP drugs are the drugs that people are taking to manage the shots that they're taking to manage their weight. Well, what they're noticing is that because this has become a big phenomenon, at least in American culture, a lot of the companies that sell like snacks, like your I don't know, whoever, Doritos and Pepsis and Cokes and all that types of those types of companies, those particular stocks have not been performing that well, right? And the companies that have been performing well are these new fast casual companies that are coming out that are more nutritious, and you're starting to see them pop up every now and then in different cities. I would, ask, go to your GPT, ask what are some new fast casual companies that are coming out, because that's what's becoming popular now. How they do under a Trump administration, I don't know, because they've done well under Biden. So those are some of the things that you kind of want to consider when you're thinking about some of the stocks that you're thinking about buying. But when you do decide to put your money into something, I always tell people to always, you always want to invest in something early, in my opinion, that can grow 10 times its value. And the only way you're going to know if it can grow 10 times its value is A, you got to know what the market cap is. And B, I need to compare it to something to know if it's even realistic for it to grow in that particular, fashion. And you learn a lot of that stuff in the classes that I offer. So very good question. All right, next question is, what are your thoughts on Uber? All right, let's pull up Uber's chart. So Uber, what I always like to do when I look at Uber is what is it doing short term, and what is it doing long term? Well, if I was to look at Uber on a day chart, it did have, I always tell people the quickest way to know if a stock is bullish or bearish is to look and see what the 200-day moving average is doing. Uber's 200-day moving average was angled down now, and it started to go down right around November. So short term, from November until now, you really wanted to be a little bearish on Uber. And just by looking at the charts, y'all know colors: red, down, green, up. But it's now going up, but it's still short term bearish. So it doesn't mean that you can't buy Uber. It just means that maybe in the next 3 to 4 months, it's going to struggle. And if you were going to make money on it using the 513 cross, these are 513 crosses, guys. You see where it crossed right here? You see where it crossed right here? Basically, when it went from green to red, y'all can see it went down. You see how it crossed right here? Guys, these are day charts. That means the minute this went red, you literally could have said, oh, it went red this day. There was a cross. The 200-day is angled down. Joel says to make stuff easy now. It's not complicated. Investing and trading is not complicated anymore. It's easy. So if it's easy, I want to make it easy. Cross, red, down. You could have saved yourself a lot of money because this stock dropped from $70 all the way to $60. Then, if you were thinking about buying this, I'm not going to buy Uber way up here. I'm going to buy Uber when I see it go from down to up, because this is buying low and selling high. This is buying high, expecting it to go higher, which is fine if you are, if you're buying this long term, but it's a terrible strategy if it's short term, because as long as this 200-day is angled down, Joel don't want to be around. I know that sounds corny, but y'all remember it. Y'all remember corny stuff. Y'all remember corny people, right? So if the 200-day is angled down short term, I don't want to be around. You can take a shot at it when it was going up in value, but if you learn my 10 candle strategy, we already 15 days in on this trend. You missed this move to the upside. The move started way back here on January the 1st. It's what's today's date? January 24th? You trying to get in 24 days late? That's not how the market moves. The market moves in shifts, up, then down a little bit, then up, then down a little bit. So wait for a pullback and then wait to get in it to the upside. But if I was buying this long term and I was already in it, you also could have said, well, as long as the 200-day or 200-week moving average is angled up, it increases your luck. So even if you were in it, you could still say, oh, I know this is a period where it's going down. Now, these are weeks, but should I stay in it? Well, if your goal is to make 10 times your money on Uber, then you stay in this bad boy as long as this 200-week moving average is angled up. Different strategy. This is an investing strategy. So you have to learn how to stomach some of this pain. And even when it drops in value, if your goal is to sell it 5 years from now, Why aren't you buying more? Okay, I just added to my Uber position just well, actually, I added it on this chart when the 200-day started to go back up. I started adding to my Uber position right there. Okay. Am I going to sell it? No, because if the goal is to hold it for 3 or 4 years, because I believe that the market cap can grow, and if I believe that Uber is going to also take advantage of driverless vehicles that are coming rapidly and very soon. All right, I've already been my Tesla is a driverless vehicle right now. I can put an address in, and I can literally let the car drive me to wherever I want it to drive me to. So it's already here. All right. I've been to Phoenix. When I was out in Phoenix, I got into a Waymo, which was a Jaguar. And it was my first time being in a vehicle outside of a Tesla that drove me to and from my destinations. Every day I got into my Waymo with my little golf clubs, and it took me to the golf course. And guess what, guys? When I got to the golf course, you know what was the beautiful thing about taking a Waymo to the golf course? I didn't have to tip. I didn't have to tip. Right. So I saved myself money by not having a human, and then I didn't have to tip. So you best believe I took another taxi from the golf course back to my hotel, and I did that over and over again and saved myself a killing. That's what's coming to you guys as cities. All right. Waymo is starting to move into everybody's city very slowly, but it's coming. And everybody thinks that it's going to take advantage of Uber. Nah, Uber's going to be one of the first places that you guys are going to be able to go to and decide, hey, do I want a gas vehicle? Do I want an electric vehicle? Do I want a Waymo that's electric or Waymo that's gas? Do I want a driverless vehicle that's that's elite? Or can I take any old driverless vehicle? You're going to have the option to pick whatever you want. Do I want to risk my life today, or do I not want to risk my life today? All right. And Uber is going to help with that. So if you believe in the driverless revolution, then Uber is going to take part in it, right? I think it's going to help Uber. It's going to allow Uber to make more money. So that's my opinions on Uber. Good question. All right, next question is, what do you think of the best stocks in the energy field is going to help with the build out of the data centers? I have a position in Vistra and OKLO. All right. So again, I like to give my opinion, but what I really like to do is I like to pull up Chat GPT so I can get a list of those particular companies. So let's go to Chat GPT. So if I went back to Chat GPT, we're going to just plug in that question. All right. What energy stocks should benefit under a Trump administration? Now, what's going on with my typing today? All right. And then we'll pull up the specific companies. Now I was in Vistra as well. I love it. I love it. So, all right, we got Exxon, we got Chevron, we got geothermal energy, we got nuclear energy. So nuclear power is very, very popular, which is why he also included OKLO or OKLO. I don't know how to pronounce it yet. But what I love Vistra because Vistra is probably the best out of all of them because it includes all of the energy. It's not just one thing. So although I love OKLO, my favorite is going to be Vistra. All right. But these are a list of different companies that if you're interested in energy, start writing down these particular companies, create a watch list. So your watch list should look something like this. So I already created a Stargate AI stock list. So for you guys that are using your phone, you probably want to look at this later on a bigger screen and you'll be able to write this list that I created for you guys that I literally got from ChatGPT. All right, but you probably want to create another list of energy stocks. And under those energy stocks, you also want to list a lot of those stocks that ChatGPT just spit out. But let's look at my favorite, which is Vistra. Oops. All right, so if we were to pull up Vistra, what you're going to notice is I got you guys into this stock really, really early, but look at what's happening right now. What does Joel always teach? Joel says, look, the stock market is going to go up, then it's going to go down, and it's going to go up, then it's going to go down, then it's going to go up. Now, using the what would Joel do method, how do you get into these stocks? Well, I always teach that you're going to see these are called flag patterns. So anytime you have a bullish stock and you have the 200-day moving average angled up, you're going to see the stock market stair step up in value. Your job is to try to get in usually right when it starts to go up. Now, the funny thing about it is that a lot of you guys haven't learned how to do this because A, you're not talking to people that actually trade the market. You have people that are teaching you how to buy like this, which sometimes makes sense, trying to buy double and triple bottoms, but a double or triple bottom is great to buy, or a upside down head and shoulders, if this 200-day moving average is angled up. If this 200-day is angled down, you can try to buy as many double bottoms or triple bottoms as you want to, and the stock is going to continue to drop and drop, because when the 200-day is angled up, it increases your luck. If it's angled down, I don't want to be around. Well, it's angled up. So if it's angled up, you guys can catch these double bottoms, or you can use the what would Joe do method and just catch it with a 513 cross when it starts to move up in value. See, guys, I don't have the patience to be in things that are losing. I like to win immediately. I want immediate gratification. I just love it. I love to get in something and the next day is up, and the next day is up, and 10 days later it's up. I just love it. I don't have a lot of you guys are losing in the market because you've learned how to deal with pain. Stop dealing with pain in the stock market. I don't know why y'all think that, oh, Joel, you just got to hold on. You got to hodl. No, you don't. You are the CEO of your accounts. The problem is your ego. When you guys start losing, you're like, well, it's going to come back around at some point. If I hit, it's not a loss until you hit the sell button. No, you're losing. I'm here to tell you that you're losing. If I'm down 10%, you're losing 10%, whether you hit buy or sell. You're losing. Accept it. I hate to lose. I hate to lose in anything. I rather have the feeling of being profitable for 4 years than feeling pain, hoping something's going to turn around for 10 years. And that's why you guys lose in the market. That's why when I do consultations, and it's for you guys that are very, 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 very smart and very, very successful at what you guys do. You guys are the worst traders or investors because you've been so great for so long. It's hard for you to say, I was wrong in that stock. I was wrong. I say it all the time. I was wrong, and I laugh at it, and then I get into the right stuff. You guys got to learn how to do the same thing. There's no reason why y'all should have been in Pfizer, and we'll come back to this stock, for this long. When the 200-day is angled down, you don't want to be around. The 200-day moving average started to go down in Pfizer in September of 2022. And a whole bunch of y'all are still in this terrible stock. Joel, is going to come back at some point. I mean, it's Pfizer. It's Pfizer. It's going to come back at some point. Joel, I mean, I'm just going to hold on. Y'all done got new careers. You're now out the stock market. You hate stocks now. You're now in some other multimedia, whatever, trying to make money because you couldn't take the loss in this terrible stock that's still angled down. Ego. But Joel, if I'm down 90%, shouldn't I just hold on to it? No. Why? You've been in this sucky, sorry company for 3 years. For 3 years. For 3 years, you endured pain. And because you were enduring pain in that stock from 2022, you see me posting stuff like this in the room. You could have you remember how somebody earlier said, Joe, what can I do with my $50? You could have had $50 invested in Nvidia and it'd be worth $300 today. But instead, you still in this sucky company that's going down in value. Well, this is when it's going to turn around. And what you do is you try to research and figure out all the good news you can possibly find that's going to support the reason why you should be in it. Then you go take a class, and hopefully this class is going to support the reason why you should be in this terrible stock for 3 or 4 years. And then you spend all this money trying to validate why this stock is going down in value, when the simple answer is the stock went down. You don't want to be around. Why are you still in it? Get out, cut that zero, and start getting with heroes. All right. I know I'm Mr. Corny Man. Mr. Corny Man. Joel. Anyway, get out of those particular stocks. And then y'all get mad. And I can always tell somebody, because the haters will come in all the time, and I can immediately tell a hater and why they're hating. And it's not your fault. You've been in Pfizer for 3, 4 years, loser. You see me, I'm all in the room dancing. Nvidia. And you're like, oh, my money's locked up in Pfizer. So what are you going to do? You're going to have sour grapes. You're going to say, I don't like this room. I don't like how this feels. I don't like that I'm losing and these guys are winning. Let me go to another room where I can feel like I'm winning. That's why I encourage everybody to put any receipt down. That's why if you're suffering in silence, I want you to book a one-on-one consultation with me so we can get you on the winning side. All right, because I do not like losing. If I'm in something and it's losing even for a minute, I'm out of it. I hate the feeling. I want you guys to be allergic to losing. I don't want losing to be even a part of your vocabulary. If it feels uneasy, I'm getting out. You can always get back in, especially if you have the 513 crossover strategy. Let's look at Nvidia, by the way. Let's say as long as this 200-day was angled up, and then increases your luck. From 2020, the beginning of 2023, you could have missed this whole move. And I'm going to show you how many times you could have got in late on Nvidia. Okay. You got a 513 cross here. You could have got in there. Let's say you missed this move. You could have said, oh, shoot. You could have got in there. You could have got in there. You could have got in here. It's telling you, what I love about the 513 crossover strategy is that it allows you to get in late. 1, 2, 3, 4, 5, 6, 7 times as an investment. It's giving me all the opportunities to be able to get into this stock, even though I'm late. Even if you got in here and you like, oh, 127, and it took a dip and you said, oh, I want to get out. This feels funny. And you get back in. Look at that. Get in. Ooh, this feels funny. Get right back in at a better price. Ooh, you got in, loved it at 125, out at 121, back in at 110. Y'all see this? And now we're way up here. You have 15 to 20 opportunities in the last 3 years to get in this particular stock. But the problem is you don't understand when to get in. How do I get in, Joel? Because if you're not looking at charts, it's almost impossible to know that this is a 513 crossover period where the momentum is starting to increase in price, and it's supposed to give me at least 10 days of equity in it. That's what the 513 crossover is there for. It's to get you in, know that it's probably going to go up for 10 days, and if you can hold on, that's when you get 2,000% returns. That's all it's doing. It's getting you in when the momentum is there. And then, can I hold on? If I can't hold on and I have to sell, look, I could have got in here, got out there, re-entered this trade way up here, and then finally got that good feeling where I didn't have to worry about that terrible feeling of losing. If you trade using the what would Joel do method, I promise you, you'll be happy like me all the time too. Happy go lucky. Because I don't like being in, like, I don't like, the only loser I got right now is AMD. That's the only loser I got right now. All my other stocks, I've cut out a bunch of my losers, and I decided, all right, I got 29 winners. You can have a loser or two in your portfolio and be all right with it. But when you have 90% of your assets in a loser, I can understand why psychologically you go through the process that you're going to with that particular stock. What I want you guys to start doing is don't cut your stocks yet. I want you to learn the technical side. Once you learn the technical side, it makes it easy to understand if you should be in or not, because now Joel doesn't have to be the one to make all the calls. The market is telling me what to do. The market tells me when to get in Nvidia. Not this person or that person, or even Jensen Wang, who's the CEO. I don't even listen to him. I listen to what he has to say. Nvidia is going to be the greatest company in the world. I knew that back in 2016. But just because it's going to be the biggest company in the world doesn't mean it's the best time to get in it. Why would I be buying Nvidia right now at all-time highs? Because, Joel, you made a 2,000% return. Okay. But we're at all-time highs because there's a 513 crossover. Okay. But the 513 crossover is at the highs. That's not buying low and selling high. That's FOMO. That's getting in because everybody's hype about it, and you're too lazy to go learn the technical side. Now, I get it. You might have a 9 to 5, so I don't want to call you lazy, but I get it. You got a 9 to 5. You ain't got time to look at the market every single day. Great. Chime in on these particular videos. All right. See when some of these charts come out. And it's crazy because if you got 3 hours to watch this video, and you got 3 hours to learn. I got a video called Advanced Technicals. The Advanced Technicals video is 2 hours long. Learn what a candlestick is, a moving average, and how to plot this stuff on your charts, and you'll be okay. All right. So let's go back to Vistra real quick. So would I be buying this particular company way up here? Hell to the nah. We at all-time highs. I'm going to wait until it looks just like this. It's going to go up. It's going to come down. And the reason and the confidence of me continually buying this is this little blue line down here that y'all fail to teach yourself. And this is the most used indicator on the planet. Now, for all of you guys that are taking classes right now, if your teacher on day one did not teach you the 200-day moving average, I want you to fire them immediately because they don't know what the hell they doing. And I said it. They don't. How can you not teach the masses the most used indicator on the planet and they have no idea what it is? It's because you don't know how to teach, period. Or you're taking people's money. All right. So I encourage anyone that goes out there and you start to teach this to people. On day one, you teach the 200-day moving average because it's the most used indicator on the planet. How the hell else are you going to know if your stock is bullish or bearish, short term or long term? It baffles me. That's why I rant all the time, because this stuff is so easy. It's so easy to make money in it. It's almost sickening. But all I hear is how people are losing money. And I'm like, how? How, Sway? Every single chart that we look at today is going to have the same pattern. 200 days angled up, you increase your luck on 513 crossovers to the upside. You're going to increase your chances of making money to the upside. You look at that bad boy on a week chart or a month chart, it's almost guaranteed money if that 200 days angle up. It will keep you out of stocks that are in a bear market. Okay. Y'all got these big study groups. Y'all studying for 3, 4, 5 hours a night. I'm like, what are y'all studying? Why Apple makes phones? Is that going to make you money? I get the fundamental part of it. Apple is a very good company that sells a lot of phones. Great. It's a great, fundamentally good company. It doesn't mean that you going to make money on it because you studied it all night long. You're going to take that fundamentally good company and you're going to learn how to buy a fundamentally good company by using the charts. You're going to mesh the charts with the fundamentals and become a funda technician. I created that word. And that's when you become a super trader or investor. And I promise you, you're going to be smarter than most of the people that you see on TV. I've been saying this for over a decade. All right, so let's get to the rest of you guys. Stop. That's my rant for the day. I promise you I won't rant no more. All right. Look, I'm already losing my voice. All right, Corey says, what do you think are the best stocks in the energy field? Hold up, did we just do this? Oh, it was the same question over and over again. All right. Again, I like Vistra. I like Exxon. Okay. Next question. You like the shades? All right. These are my Tom Fords. I've been wearing these. Favorite shades. All right. Chastity said, I have missed these. I'm glad I'm catching you now. Sorry if you came in on me ranting, but y'all know what y'all know that's what I do. All right. Next question is SPY swing trade, also MES swing trade. All right. So the definition of a swing trade, guys. Now, if you're day trading is 1 to 7 days. I know a lot of people didn't know that. Day trading is 1 to 7 days. Anything more than 7 days is considered a swing trade. Swing trades last up to 1 year. Anything more than a year is an investment. All right. So when you say swing trade, it can be anywhere from 7 days to a year. So I always tell people to kind of bring that in, because your swing trade of 8 or 9 months might be different from somebody's swing trade for 7 or 1 or 2 weeks. So I always teach using the what would Joe do method is that your charts that you're looking at, which should be one chart. When you guys come to me, we're not using 7 and 8 different charts for one strategy. It's one chart, one. If you can't create a strategy from one chart, chances are that strategy probably ain't going to work. Now, I piss a lot of people off when I say this, because, guys, there's combinations, right? There's a reason why a combination lock has more than 3 or 4 numbers on it. Why doesn't a combination lock have 2 numbers or 1 number? Because if a combination lock had 1 number, you'll be able to figure out the combination fairly quickly. You got 9 choices, right? If you add 2 numbers, you got 99. You got 99 different scenarios. This is how I view trading and investing. The more charts and the more indicators you add, the more combinations you have. The more combinations you have, the more difficult that strategy becomes, and it decreases the amount of times that you can take actual trades. All right. Simplify what you're doing. One chart, one indicator on the bottom, one indicator up top. That's it. One chart, one indicator up top, one indicator down low. I promise you, I almost guarantee you, you will see the market way clearer than you have ever in your life. All right. That's why I keep my charts as clear as possible. That's why there's no issues when I'm teaching, right? Everybody sees the same things. Everybody understands the same thing. There's a reason for that. Okay. Very, very simple. So if we were looking at the ES and we were looking at a swing trade, I know. Why does this look so easy? It's like, well, Joe, shouldn't I just be able to get in when it's green and ride it up, and then when it's red, get out? I'm like, yeah. They're like, Joel, it can't be that freaking easy. I'm like, it is that easy. The market either goes up or down. Y'all complicate things. You got a 50% chance of making money to the upside. You just got to figure out, is the trend starting, or am I at the end of this trend? That's where you guys go wrong. And when you flipping through 5 and 6 and 7 charts, how the heck am I going to know if I'm in the trend early or not? Joe, you don't know what you're talking about. I've been using these indicators for years. Whatever. All right. Match your stats against mine. Let's match your performance against my performance. I can do this over 100 stocks. Some of you guys get lucky and you're able to pick specific stocks. And then if you throw a dart, it seems like your strategy is right. But I always tell people, look, if you have a strategy, take that strategy, and it should work over everything that you look at. If it only works on a couple of things, then chances are you're gambling. You don't particularly have a strategy. All right. So the ES, if we were looking at the ES, what does your eyes tell you? I don't even have to teach all this with my mouth. I can shut up. What does this chart show you? Is it mostly green or red? It's green. That means we've been bullish. When it does go red, how long is it red? 2, 3, 4 candles, 3 candles, 1 candle, 1 candle, 3, 4, 5, 6, 7, 8, 9, about 12 candles. This is the economy. Hold up, Joel. What I'm noticing is that when it's red, it's not red that long. It's like red for about 10 candles, but it's mostly green. So if it's mostly green, then that's letting you know that the economy is mostly going up in value. S&P is mostly going up in value. When you see a big long string of green, what does that tell you? I might be towards the end of this trend. But when it goes red, it only goes red for a little bit before it starts to go green for a while again, and then red for a little bit before it goes green for a while. Well, what is it showing you? We've been in this uptrend for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about 14 days. We are 14 days into a trend. Now we're looking at a week chart. So that's 14 weeks. The market sometimes just wants to take a little bit of break before we get another 14-week run. Chances are, if we're already at the all-time highs, most of the time we're not going to continue to go 14 weeks up. The market don't like buying at the all-time highs. Just like, do you like buying clothes and groceries and going to the store or buying a car or buying a house at the all-time highs? No, I like things on sale. Well, how do you know it's on sale if you can't pull up a chart and say, oh, we're 20% off or we 30% off from the highs? Joel, I ain't got time for that. Well, then you just don't have time to make money then, because the stock market is the building blocks of business. If you want to open up a business, you best see if you can make money in the stock market first, because chances are if you can't make money this easy, it's going to be really hard for you to make money in whatever business venture that you want to go into. And I promise you, the business venture that you want to go into, if you look up the stocks that are in that same field, you're going to even know when they're down periods and up periods in it, because this is the building blocks of business. If the stock market goes away, the whole economy, your whole way of life is going to go away. So you best learn it. It's going to teach you what's going on around you. All right. The S&P 500 right now is at all-time highs. How do I know that? This big old bubble right here. I ain't trying to buy the S&P right here as a swing trade. Do I want to short it? I don't like shorting bullish things, but if I'm going to short this, I'm going to wait until I see a cross like this. But even when you see a cross like that, the market, because the 200-week moving average is angled up, you only get about 2-3 weeks and then it starts to push up again. The last time we got more than 3 weeks was way back here in August of 2023. We went a whole year during Biden's last year, and the market can really only go down for 3 weeks before ratcheting back up in value, which is why y'all don't see no bears in the room right now. Because bears, if they did their homework, they would learn not to short very bullish things. There's enough terrible things out there that you can short. Why are you on? I always rant about this too, because it's like, why are you shorting something that's great? You have to have the personality of, I don't like Nvidia making a whole bunch of money, so I want to short it because it makes me feel so much better that I can short a company Joel that made 2,000% return on. And I'm like, wouldn't it feel better if you shorted a company that was already terrible? Like, I rather get in a fight with somebody that's bad than getting in a fight with somebody that's good. Like, I don't understand the psychology behind shorting great companies. But this is why the bears get ran over, because a lot of the bears want the market to go down. I don't know what's going on in their lives, but you can make money buying. I'm not trying to beat up on the bears. I short the market a lot too. But when I short the market, I short terrible companies. I don't short the good companies because I'm in those companies long term. Why do I want to short the companies that I'm trying to make money off of? The ES is running up in value. All right. Now the ES is also similar to the S&P 500. So if you were looking at the S&P 500, you're going to also see that it's at its all-time highs. I don't really want to take a move here. Now, I do see that there might be a 513 cross, but it's not going green down here. I like to match my colors, red and red, green and green. The chart is telling you where you're going to make the most money. So why do I want to be a black sheep and go against what the market is telling me to do? A lot of you guys with ego love to go against the norm. The stock market is not a place that I would. It's just harder to do it. Okay. So my opinion is I wouldn't get in here, but I would wait for it to kind of come in price. All right. All right. Let's talk about Palantir. So Palantir is one of those companies that I got you guys in, but I got you guys into this stock as a trade. Right now, it's ballooned in price so much that let's create a new drawing set called clean. So what do you notice? When it's green, it goes up. It just started to go green again, but it's red here. So I'm not going to tell you to buy Palantir. I just think this is a fake out. It's probably going to go red. It's going to go down for a while. When do you want to get back in it? When it looks like this. When it drops in price and it starts to go green, then I want to jump in Palantir. Okay. But do I want to get in it now? It depends on your strategy. If you're trying to buy this as an investment, looking at the week chart, I can hold off a little bit by looking at the month chart, because look at what the month chart is showing you. Look at how long it's been going up in price. These are months. So this is 1 month, 2 months, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 22 months. You missed out. If you haven't been in Palantir and you just now getting into it 22 months later on a trade, You don't know how to trade. Okay, hold off. It's gonna pull back. As an investment, I want to buy it when it's 20 to 30% off. You could take out this little tool right here, put it at the highs, $84.80. Do I want to buy it there? No, I want to buy it when it's 20 to 30% off. So if it can get down to the 67 range, and that's where a lot of people did. A lot of people saw this sell off. They know about beta and volatility. Once it dropped all the way down here, it was off 25%. That's how you buy stocks like this that are bullish. You wait for them to pull back 25 or 30%, and then you get into them. Okay. You don't buy them way up here. Okay. Hold off. Wait for it to come back in price, and then it's going to go up in price. All right. If I was doing this short term, this is how it would have looked. Let's say you didn't want to buy it 20 or 30% off. All right, you want to use the what would Joe do method? Well, Joe says as long as the 200 days angled up, it increases your luck. But I'm not going to buy it until it starts to go up because Joe hates being in things that are losing. I can't stand it. You think I'm going to sit in here and buy this and then be wrong for 3, 4, 5, 6 days? I'd rather get in here and get immediate. Look, I'm happy the next day. I love that. Buy it at 2:00, wake up at 9:30, and it's up in value. I love that. Y'all love this. I love this. I want to see that it started to go up. I get in. Hopefully, it can hold off for 10 days. And then if it doesn't break my stop, then it might be a stock that might give me a 200 or 300% return. I think I got in somewhere way back here. And I'm up 300%, I think. What, $32? No, I'm up. I must have got in earlier than that. But I'm up 200% in this stock. All right. So do I hold on to it? Well, that's another question you need to ask yourself, right? Once you're in the profit, I'd rather you guys be gambling profit than gambling when you're losing. It's a good thing to say, Joel, I'm up 200%. What should I do? Then, Joel, I'm down 90%. What should I do? Well, if you're up 200%, you could sell half of it, let the rest ride. You could sell all of it, wait for it to pull back 20%. You could sell all of it, put it into something else, and try to gain another 10x while you're waiting for this to drop another 30 or 40%. The sky is the limit when you're profiting. When you're losing, though, you shouldn't be in that stock while it's losing. If you were to buy it way up here, why are you buying it for $84 after it's got a run like this? Because you don't know how to invest. That's why. When you could be getting in here, you could have just waited 15 days, and instead of buying it for $84, you could have got in at $71 just by being a little patient. Just a little. Stocks are going to pull. I promise you guys, you aren't going to miss out on the move. I promise you. There's no stock that we're going to look at today where you missed out and that was the only time you could have got in. Nvidia, you could have got in it 21 times in the last 3 years and profited. 21 times. I'm just throwing that number out there. I put those lines there. It was definitely more than 10. Okay. But if you don't have the charts that are up, you're blind. You don't know when to get in or not. I don't know, Joel. The charts is the part of the strategy that you're missing, or the fundamental side is the side that you're missing. If you're on, I know a lot of you guys that are just on charts and you don't pick fundamentally good companies because you're buying companies that are $1 billion or less in market cap, that the billionaires aren't buying, and then you're wondering why it's not going up. You done put 100% of your assets in cannabis because you smoke weed every day, and you didn't realize on the charts every single cannabis stock has a 200-day moving average that's angled down, 200-week moving averages that are angled down. These are stocks that might not recover for 3, 4, 5 years. Doesn't mean that Joel can't have I got 3,000 shares of Curaleaf, but I'm not expecting it to go up this year. Why? Because when I pull up his chart, Although I've done all the research I can on this company, the 200 days angled down. The 200-week moving average is angled down. When did the 200-week moving average start angling down? Back in 2022. So anybody in cannabis stocks right now holding, you just holding and praying just because. Well, there's some new laws that are coming out, and I've been researching. You're going to research yourself to death. Just because you researching doesn't mean that it's going to turn around this year, next year, or 10 years from now. But what the market will tell you through the technical side is when the change is happening. All right. Once I put my ego to the side and I let the market tell me when to get in and out of things, trading and investing became easy because I just got on cruise control. I took Joel out of the equation because Joel is a know-it-all. He thinks he knows when it's going up and when it's going down, and off his gut. Once I took myself out of the equation, trading and investing became dumb easy. Okay. All right. Tanika said, can you give your thoughts on APLD? All right. So, guys, I love APLD. You know why I like Applied Digital? And this is going to be a new stock that we talk about because I went on ChatGPT and I said, what companies, how can I word this? What companies are, sorry guys, I didn't do well in English. What companies is Nvidia, God dang, investing in right now? Y'all see how simple this is? Trading and investing is easy when you know what to look for. Well, shoot, Nvidia is investing in XAI, Run AI. Nvidia is buying ARM now? Huh, who knew? So when y'all see me talking about buying ARM and y'all like, how did Joel know? How did Joel know to get an ARM? Because while you guys are talking to individuals, humans think they know everything. I took humans out of the element and I said, I'm going to start talking to the computers because the computers are going to give me the information that I need. Okay. CoreWeave, you want to know why we've been buying SoundHound? This is the reason. Why did it become a meme stock? This is this is how I found SoundHound. Okay. Now, what's interesting is that they didn't mention APLG, which is applied. I don't even know the name of the company, and I own it, which is applied digital. So I'm surprised it didn't mention it, but you can put here, does Nvidia invest in APLD? And the answer is yes. So one day I was doing research on ChatGPT and I simply asked at that particular time, what companies did Nvidia invest in the last 30 days? Now, Nvidia is the largest company on the planet. Some of you guys didn't even know that until just now. So if they're the largest company on the planet, that means they have money to invest in other companies. And just like in real life, it doesn't matter how great a company is. Like, haven't y'all seen products? Y'all watch Shark Tank, right? You can have the best idea on the planet, right? But there's a difference between your idea and even bringing it into reality and making and having investments behind you or having backing that can allow your dream to come true. Just because you have a great idea doesn't mean that it's going to make money, right? And we've seen a lot of things that are out there. Teslas are not the best vehicles on the planet. At some point, I believe that. But just because the car company is the largest car company on the planet doesn't mean that Teslas are the best vehicles on the planet. But guess what it did? It got backing from the largest company or corporation on the planet, which is America. So once America under the Obama administration decided to back Tesla, Tesla became the largest company on the planet. So you have to follow the money. If the largest company on the planet is buying Nvidia, I'm sorry, is buying Applied Digital, and they're buying SoundHound, and they're buying CoreWeave, and they're buying ARM, then you have a higher probability of making money, because if the richest company on the planet is buying it, well, shoot, I think I want to buy it too. If I see Elon Musk, who is the richest man on the planet, buying Dogecoin, and he talking about buying it, that's why Dogecoin grew in value. It's just how humans operate. So even though some of these companies could be crap, and I got a lot of technical people that I argue with all the time about Apple and Google and what technology is the best, and they won't invest in a company because they want to go with what they feel is the best company that's out there. Just because it's the best company that's out there does not mean it's going to make the most money. All right. I've had people for years say that when AMD and Nvidia were really competing with each other, that AMD was the better company. Oh, well, AMD got left behind, and Nvidia is the largest company on the planet now. So you have to be able to follow the money. But yes, Nvidia has invested in Applied Digital Corporation in September of 2024. That's why I just recently started buying it. Not only did I just start recently buying it, I put it out to my Ultimate members when I was buying Applied Digital. So if you were an Ultimate member, you would have received that message through the app, probably like 30 or 60 days ago. And you would have been able to capitalize on the move to the upside before the masses get to it. It's the same thing that happened with Sound, which is why I encourage you guys to use my Ask Joel GPT. But it also tells you here that they participated in $160 million private placement financing and acquired 7 million shares of the particular company. And believe me, if Nvidia is getting money out there, they're going to pour money into this company, whether it's a great company or not, because they have invested in it. All right. So I try to take you guys through my way of thinking, my simplistic way of thinking of how you're able to find information, because the way you guys are going about it, I'm not going to say it's wrong. It's just not my cup of tea. I take individuals out of the equation. I love using computers. I love using the technicals, and now I can see the I can follow the money. And then if I want to get into a great conversation with individuals in the room about these particular products, just for entertainment purposes, then I'll do that. But more than likely, I'm not going to buy something, even if the greatest person on earth is saying they're buying it, until I start seeing money flow into it. So when you pull up the charts, and I was looking at Applied Digital just recently, the 200-day was angled down. But if you notice, right around here, now you can start getting in things when it starts to go flat. Once the 200-day started to go flat, look here. There's a 513 cross right here. You could have got in here. You could have missed it, got in again right here. You could have missed that. You could have got in there. You could have got in there. And now we're right here. It gave you 1, 2, 3, 4, 5 opportunities to get in. Okay. All right. Now, does it mean that this is when it goes to the sky? No. I mean, it could pull back. And if it pulls back, and you see I have alerts here, probably where my stops are. So if it gets down to this particular price, I'm going to have to decide if I'm going to buy more or if I want to get out. Because if we go sideways at this price for a long time, that will allow this 200-day to go flat and maybe even down. So what I like to see is I like to see things drop really, really fast, because when it drops really, really fast, it takes time for this 200-day to angle down. Sometimes it takes, months. You see how it took, well, looking at this chart, it took about a month before it started to turn up in price. So even if we get a price gouge tomorrow and it goes to $6, the 200-day is still going to be angled up, which is going to give a lot of people encouragement to buy it, and it just sold off hard that day. But if we go sideways for about 90 days and that 200-day start to angle down, and we get down to this alert, then it's going to change the way that I view, or it's going to change the strategy that I have for this particular company. So hopefully that makes a lot of sense. And the next question is, can we look at Sound and Sofi as a possible 10x? So if we were looking at SoundHound, which is one of the companies that Nvidia is investing in, I got you guys in SoundHound way down here. All right, congratulations. All right, now SoundHound looks like we got the major push that we were looking for. It didn't quite 10x, but it grew from about $3 all the way up to about $24. Anytime you see a stock 10x or get close to it within 1 year, it's going to take a break. Now, a stock that has that much power is probably going to drop 50%. Any stock that can, and this is one of the laws, one of the what would Joe do laws. Any stock that moves up in value over 100% in a year is most likely within the next 365 days going to drop 50%. So that's how you know where to buy those particular stocks. I teach that in that beta video. Okay. The stock went to $24. What's half of $25? $12.50. Where would I have re-entered Sound? Guess where, guys? At $12.50. Y'all see how easy that was? Joel, it can't be that easy. It is that easy. Stock grew 100%. It got cut in half. Cut in half was $12.50. If I wanted to take a shot at it, I didn't have to use Bollinger Bands or all of these reversal crap that y'all be using to kind of get, like, why do I need a band to tell me if something's dropping in value? Why do I need a band to tell me that it's selling off really hard? All I gotta do is pull up a chart and look at it and see that it's selling off hard. I don't need something to tell me that this dropped 50%, guys. I don't care what you put on there. That's a big move to the downside. And you guys are paying $15,000 for a Bollinger Band class to teach you that this sold off hard. Now, does that make any sense? But y'all do it. Start using a different method. My charts don't have nothing on it. A stock that moves up 100% is going to drop 50%. I don't need indicators to tell me that. You just need to be able to pull up a chart and pull up a calculator and figure out where this thing can drop. If the 200 day is angled up, it's going to increase your luck. Do I want to buy it when it's red? No. Do I want to buy it now? This is why a lot of people are asking about it, because the what would Joe do method says I should be buying Sound maybe as a trade. Okay. The only reason why just about every stock that we're looking at, I'm telling you guys to pause, is because we got a new administration. We don't know what the hell Trump's going to do in the next 90 days. So wait 90 days. Sit back and chill. Even I'm not 100% invested. I'm about 75% invested. I got 25% of my assets sitting on the side waiting just in case the market drops 20 or 30%. I got a lot of money sitting on the side that I can pour into the market. Let Bitcoin come back to 50,000. I'm buying another coin. I'm still mad because I had 2 coins and I sold one. And I'm going to say this on every live until I'm able to buy it back, because I could have had 2. I missed out on 50 grand. All right. I caught one of them, so I still kind of won, but I could have been up 100K in like August, September, October, November. I could have made 100K in like 4 months. Instead, I made 50K off that investment. All right. So I'm kind of pissed. So I'm waiting 90 days. I don't know. Like, there's certain periods where I sit back and chill. Anytime there's a new administration, I sit back and I chill. Anytime there's a major change in the makeup of the market, sit back and chill. You can always get back in. Always. Always. Okay. So SoundHound, a lot of people missed out on this move. Great. If you want to take a shot here, I'm not going to bite your head off because not only did we catch it there, you could have used a Fibonacci tool and caught this move. And look at where we are. We're at the 50% mark. It dropped 50% and it came back 50% on the Fibonacci. And it's starting to do a 513 cross. So if you were to take a shot there, even if it turned back around here and you lost, great. I'd rather you lose right here because chances are if you take that trade every single time, you're gonna do okay, right? Because look, there's a 513 cross to the upside. That's a win. That's a win. That's a win. That was flat. That's a win. That's a win. It wins. You got 70-80% chance of winning if you're using the what would Joe do method. So if this is one of the times it loses, I promise you the next time it looks like this, it's probably going to be the win that you're looking for. You just got to stick with it. And if you can't see it using your charts, then you're going to miss it. Okay. All right. But the question was, can you look, is it a company that can 10x? So in order to figure out if a company can 10x, you got to see how big it actually is. So if I was looking at something like a SoundHound, and let me do search. All right, so let's say I was looking at Sound. First of all, I need to know what the market cap is. And where is it? So Sound. The market cap of Sound is $6 billion. Guys, $6 billion is nothing. Even at this list that I'm looking at right now, if I was to put these companies in order of market cap, the largest all the way to the smallest, you're going to see SoundHound way down here. So it lets you know that there's all types of companies that are 100 billion, 90 billion, 3 trillion in size. So for Sound to go from 6 billion to 60 billion, is that out of the question? Well, let's go ask Job GPT. Is it realistic for, and I remember you guys can ask this thing anything. Is it realistic for a company like Sound to grow to 60 billion in market cap? Now, I don't even know what it's going to say. This says whether a company like SoundHound can grow to a market cap of 60 billion depends on several factors. Its growth trajectory, industry potential, and the ability to capitalize on opportunities. SoundHound's AI's current market cap, is 60 billion. Okay. So this would require a I don't know if that's correct because it should be 10x, which is significant. This also says that conversations in the AI space shows you that the global conversation on the AI market is to exceed 40 billion by 2030. I don't know how much that means, but it means that the market that it's particularly in is going to grow to about 40 billion by 2030, right? So if it's only a $6 billion company, depending on other companies that are in its particular environment, is going to give you an idea if this company has the ability to reach that value. So I want you guys to start using Chat GPT to kind of give you comps on companies that are similar to it, right? Can SoundHound ever be as large as Apple, right? The question is probably no. Can SoundHound be a $3 trillion company in 20 years? Well, because of what Apple does and how they make money, the answer realistically is probably no. But if you look up other companies that are similar to Sound, which I always like to write, so I always like to say what companies are similar to SoundHound that I can invest in. Then you can get an idea of how big this particular company can grow. So if you're interested in companies that are similar to SoundHound, I should have said, and what are their market caps? Now I can get an idea if I can get a 10x in something like SoundHound. So you probably want to look up CRNC, which I've never heard of, which is Cerence Inc. You want to look up C3AI. You want to look up Big Bear. You want to look up Palantir. Okay. And Palantir is what, $100 billion company right now. So it at least lets me know that these companies, and you see how it gave me that list. Cerence is it's not even a it's $500 million. C3AI is $4 billion in size. All of these companies that are similar to it, with the exception of Palantir, are all SoundHound seems to be bigger than pretty much all of them except for Palantir. Palantir is $180 billion. So SoundHound being $6 billion, could it grow to 60 billion? Well, if Palantir is similar to it, which I wouldn't say that they're similar, because SoundHound is all about, if you've ever used SoundHound and the voice activation of it versus what Palantir does, which is totally different. And that's where you'll see some issues with Chat GPT, but it's giving me an idea of where it can appraise to, what it can be valued at if it was able to grow. Okay. Does it have a growth trajectory that will allow me to make 10x? Well, $6 billion to $60 billion is going to be a big move, but as you can see, it's pulled back 50%. So it's already been 10 billion. And then, well, I don't know what the value was when it was at $24. I guess if it's 6 billion, it's 16. If it gets to 24 billion, that's about a third higher. So it was close to 10 billion in size. It dropped to 5 billion. Now it's at 6 billion. Okay. So, what I would do is I would wait and see once it gets to, if it can grow from 6 to 12, see how long that took for it to get to 12. I'm sorry, $12 billion in market cap, which would take this to about $32 a share. And then once you get the $32 a share, look and see how fast that happened. If it took a 3 or 4 year period to get there, then it's going to tell you about how long it's probably going to take for it to grow another, 100% in value, or another $3 billion. So hopefully that was able to, hopefully I was able to help you there. But let's look at Sofi. Sofi also has a 200-day moving average that's angled up. We're not quite at the all-time highs. A lot of people like Sofi because banks do pretty well under Trump, and he's trying to bully the Feds into dropping interest rates. And anytime, at least recently, when interest rates dropped, it caused, when interest rates dropped, the banks were able to make money either way, but it also encouraged people to refinance. It also encouraged people to buy more homes, and that's where the banks made a lot of money also. All right. So SoFi, which is a fintech bank, should do well. And if you notice, it's starting to creep up in value again. All right. You're 7 or 8 days into this. So if you were looking at this for a trade, I would hold off and wait for it to come back like this and then start to go back up in value. But as an investment, I'm invested in SoFi, and being able to buy this stock. This stock used to be $28 in value, dropped to 4, and now it's starting to move up in value. Now it does have a 200-week moving average that's angled down, so usually you don't want to be around, but you can make a special exception in this particular case. Because look at what the chart looks like it wants to do. The chart looks like it wants to go back to all-time high. All right. Good question. All right. You like nice, Joel. I do. I do. All right. I know these are comments from something I said earlier, but y'all know I'm a talkaholic, so I have no idea. You guys that are on the comment section, you guys understand where some of these comments came from. All right, Snap. So let's look at Snap. All right, so Snap, guys, was doing well because of the TikTok ban. Now, there's a couple of things I noticed about Snapchat. All right, and this comes up every time we do a live. There's a saying that the wider the base, it increases the space to the upside. So what a lot of people love about Snapchat is that although Snapchat started to go down in value back in 2021, and it hasn't really been able to recover, it's been bouncing between $7 and $17 from August of 2022 all the way until now. The 200 week moving average is angled down. But what I do like about this is in this particular case, because it's been ranging for so long, this would be a good time to maybe take trades or try to invest in it because you have these values that are there, 17 and 8. Anytime you get closer to 8, you probably want to buy it. Once you get close to 17, you might want to lighten up on it or maybe check and see if there's a catalyst that can take it higher. The catalyst that was taking it higher just recently was the ban of TikTok. Well, now we know that TikTok is not going to get banned. All right. Trump's going to make some type of agreement with TikTok. Well, it seems that way. Anything can happen, but it looks like he wants to, from my understanding, he said this on TV. He wants to cut a deal with TikTok. He wants America to own 50% of it. Otherwise, TikTok can go to hell, which is pretty much what he was saying. So, can other investors come in and buy it? Yeah, but at least for the next 90 days, or I think it's 75 days from that point, which is probably now to 70 days, Snapchat's probably going to go down in value because there's no catalyst to make it go up in value anymore. All right. So you start seeing it in the charts. In the charts, you see the 513 cross happening and you see Snapchat selling off in price. All right. I'm not surprised by this. Even if you looked at the 200-day moving average, you got a 513 cross that happened back on January the 16th, and Snapchat started to go down in value. And you're 5 or 6 days into a short. And this bad boy could go down to the $8 level. Now, once it get there, because it's been ranging between 8 and 17 for 4 years, it can be a great opportunity to buy. But what does this chart look like it wants to do? You have minor support at this level, and then you got major support at 8. So there's support at $10.41, where we're close to that now. So if you just wanted to buy this in your kid's account or for yourself for a long-term investment, and you don't mind it dropping to 8 and you're buying more, then go ahead, buy now. As a trader, there's short-term bearishness. No way I'm going to be buying calls on this because it's going down. And if you're holding on now because you're just losing on it, then that's on you, because the news already came out that TikTok is not getting banned, and you got 75 days until there's going to be an answer. So if as a trader even thinking about buying a call, I wouldn't even be thinking about it for 70 something days. It's January. I wouldn't even be thinking about this stock until April. But as an investor, different strategy. You could take a shot there. I would probably hold off. I'm already invested. I mean, my kids own Snapchat. They keep buying more and more, and that's fine because they got 30 years for this thing to turn around. But I understand everybody's position on Snap. This is one of those rare occasions where you got a catalyst for it to go up, but all the charts are telling you to not be in it. So it really does need a catalyst to go up, but it's ranging between 17 and 8. So 8 is your area of support. The closer you get to it, the better off you are. And I mean, seeing that it's at $11 right now, if it drops another $2, it'll be down what, 20%. If you can stomach a 20% drop, then buy Snapchat. All right. Let's look at analyze NVO for investors under Trump, please. All right. And what's going on? All right, Howard alumni. We're going to look at Novo Nordisk, and we're going to look at it under Trump. So we already know what years Trump was in office. Now, here's what's interesting. GLP-1 drugs were not out, or if they were out, they weren't popular under Trump. So it's going to be hard to kind of get a feel for how they're going to perform because they really started to take off during Biden. So these are one of those rare occurrences where I wouldn't go to ChatGPT unless I wanted to ask, can a stock like Novo Nordisk do well under Trump? Let's see what ChatGPT tells us. All right, so the potential performance of Novo Nordisk under President Donald Trump's administration involves several factors. Policy appointments. We know that Robert F. Kennedy is going to come in, and because of GLP-1 drugs, well, it says that he's expressed his skepticism towards pharmaceutical companies and a preference for lifestyle interventions over medications for weight loss. This stance could impact the adoption of drugs like Novo Nordisk, Ozempic. All right. So, because Robert F. Kennedy is going to be in place, like I said, you got a 50-50 chance. Are people still going to buy the drug? Yes, but you can't remember, guys, the catalyst behind stocks going up in value. I've seen stocks perform well by making money, but because Wall Street didn't believe in it, the stock couldn't go up in value. And I've seen vice versa. So in these particular situations, it's 50-50, right? Under this new administration, they're really not for Novo, they're really not for companies like Eli Lilly or Novo Nordisk. So, I pull up the charts. So when I pull up the charts and we go to NVO, you notice that right when, now these are weeks, Novo Nordisk started to go down in value, guys, way back in, which is crazy. Novo Nordisk started to go down in value way back here, September of 2024. Now, y'all see how easy that was? 513 cross, red, and it went down in value. The 200-week moving average is angled up. So if you wanted to buy this as an investment, most teachers, good teachers that are out there that teaches you guys moving averages, are going to tell you this is the time to buy Novo Nordisk as an investment. How do we know it's as an investment? Because we're looking at a week chart. So I also want to look up, this is one of those rare times I pull up the month chart, and I kind of want to see what's happening on the month chart. Now on the month chart, we're really, really far away from the 200-week moving average. So as an investment, I always ask myself, what's the worst case scenario, right? The worst case scenario is that we drop way down here to $45. Where did I get $45 from? That was the last time it went down, and right when it started to go up in price and it started to go green, I want to go to that particular period. Because remember, in order for this stock to go from $59 to $148, these are months. These are months of people buying it. 1 month, 2 months, 3 months, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. For 20 months, which was almost a year and a half, people bought up this stock. So getting in it now If it was at the highs, I would have said, yo, y'all might want to chill. But we've been selling off. And what is the rule? If a stock can grow 100%, remember, what's the what would Joe do rule? If a stock can grow from $60 to 148, that means it doubled in price in a year. What is the rule? That realistically within the next year is probably going to drop 50% minimum in price. Well, its high was 150. What's half of 150? 75. I wouldn't even thought about buying this stock unless it was $75 or less. Right? That's half off. We're close to it. Right? It dropped to 81.5 there. It dropped to $78 there. So if you were thinking about buying this as an investment, this is where a lot of investors are taking a shot at Novo Nordisk. All right. I'm even considering buying this particular stock because I want a piece of the GLP-1. It's the only industry that I didn't capitalize off of in the last 4 years. And I'm kind of upset about that because I can't call myself a guru if I didn't catch the GLP-1 run. I caught every other run, but I didn't catch the GLP-1. I gotta, that's one of my my marks, right? And I should have been able to get you guys in on this one. All right. I just wasn't paying attention to it. I haven't watched biotech companies, pharmaceutical companies have not really done well in the last decade. So I missed out on this one. So, if you're thinking about buying it, like I said, I'm thinking about getting in. Even if I was looking at a week chart, all the charts look ugly. But the week chart, the 200-week moving average is angled up and it's starting to go green here and it's 50% off. If you're going to buy something on sale, this is how you do it. I don't need a reversal indicator to tell me that this thing is, I just know it's 50% off. And it's touching the 200-week moving average. I don't need an extra indicator to tell me that this is oversold. But it's like a lot of you guys need those extra training wheels, which is information overload that you don't need. Okay. But it's down here. It's here. If you want to take a shot at it, take a shot at it. If you want to use the what would Joe do method to get in, hold off and wait until you see a 513 cross to the upside, which it looks like that's what it's doing today. But it didn't quite cross yet. And this is how it looks. And this is a day chart. Okay. So it looks real good today. And look at what this candle did. Anytime you see a candle that takes up, look at this candle. Y'all see all of this inventory? This stock literally ate up all of this. If you were short, you're getting squeezed today. So it looks like somebody pulled the trigger on a really good company that might be turning around. And it's up 8% today. Just because it's up 8% today, guys, doesn't mean that you're late. This bad boy can continue to go up in price. Look, it can go to 110. So, you want to watch this one. But what I also like to do is, even though it's going up in price, it still has a 200-day moving average that's angled down. So for you traders that are trading this, get out when you get to 121. Let's look and see what the options market is talking about. The options market will also tell you what strike everybody's betting on. For now, it looks like we're betting on, and let me just pick 14 strikes. Even if we were to go out to March, what strike is everybody picking? And we got the verticals up. It looks like everybody is picking the 95 strike. If we were to go out to April, looks like everybody's picking the 90 strike. We were going out to May, June. Look, there's some unusual options activity way out here at the 115 strike. Okay. So it looks like this bad boy looks like it wants to go up in value. What I also want to look for when I'm looking for unusual options activity is I want to see, now here's something Well, the open interest is high, but the volume on the put side, guys, is not that high. So looking at the options market, it looks like the call to put ratio is favoring the call side. So if I was a betting man, this might be time to get in something like NVO. What I also want to look for, though, is I want to see what its competitor is doing with Eli Lilly, and let's see what Eli Lilly's charts are doing. Usually they'll run in tandem. So this looks like it wants to do a 513 cross to the upside, but see, Lilly had been performing well. Even on the week chart is still angled up. Because Lilly was kicking Novo's butt so bad, that's why its 200-week moving average isn't angled down. But stocks like this that have a beta of, let's look and see what the beta is. The beta is 0.39, which is not even over 1.0. They're not going to move that much. So a stock like this, anytime it's down 10 to 20%, is when you want to take a shot at this one because the beta is low. See, this stock didn't double in value in 1 year. If you were to go all the way back to the beginning of 2024, this stock was $584 in price. It moved 50%. So it doesn't, the rules are not going to apply to it the same way as Novo. Novo had a higher beta. It doubled in price. So dropping 50% was normal. Lilly, being a larger company with a lower beta, moved up 50% in value. So seeing it drop 50% is not realistic. But seeing it drop about 10% is kind of where you want to buy these stocks. Now, you won't know this if you don't know how to pull up the beta on those particular stocks. So I'm going to clear this. If I was to go and look and see where 972 is, and then I come down here and price to 758, you're going to notice that it's down 20%. 20% is huge for a company like this. So even if you were buying this as an investment and you were being lazy, you could say, well, Joel, I'm buying Lilly 20% off. The 200-week moving average is angled up and the 200-day is angled up. Cut me some slack. Then I'm going to say, you know what? You are right. In fact, I'm going to buy some with you. So these are the times that I can buy stocks that are falling in price, and I kind of want to catch it, hoping that it can go up in price. This is how you do it. But if I wanted to wait, you can just wait until you see a 513 cross happen. And as long as I still have some equity in that stock and we're not at the all-time highs, see, I don't want to catch a 513 right there. I remember this day I was doing a live and I was like, guys, why are you buying this at the all-time highs? Like, let it come in some. And that's what's happening right now. All right. So Lilly, Novo Nordisk. If you want some smaller ones like Structure Therapeutics, which is GPCR, if you're looking for something that can 10x, those are some good stocks that will capitalize off the GLP-1 drugs. All right. Kim said amen on a previous comment. I apologize. You know, I'm a talkaholic. Brad is loving the conversation. All right. Pastor Harris says, all right, sir. Looking like a preacher today. Crypto, Bitcoin, long term. All right. Oops, on here too. My bad, preacher. But Pastor Harris said, Bitcoin. Did y'all know that we could look at Bitcoin's chart and everything that we talked about today? I don't care what asset you're looking at. If you learn price action and you follow the money, you don't have to listen to cousin Ed and Auntie Carol. Well, I got an auntie named Carol. I didn't mean to say that. Auntie Elizabeth. You don't have to listen to them anymore, right? You can pull up your charts. You can take a stock tip. Let's say people came to me and say, Trump says he's going to take crypto to $5 million a coin, and we're at 100,000 right now. Does that mean that I need to buy today? No. Bitcoin's going to give you the opportunity to buy it. Now, Y'all remember what I said earlier? When I said an asset that can grow 100% in 1 year, it also applies to crypto. If you don't believe me, let's go all the way back. Let's look at history. Let's go back and look at the history. Let's pull up a month chart and look at the history of Bitcoin. So I'm going to pull up a clean chart. All right. Now, in 2008, actually, I can't pull up the history of it because the Bitcoin futures was created in 2018, which sucks. But let's just look at Bitcoin from 2018 till now. That's 7 years. All right. Bitcoin was in a crypto winter all the way from 2019. Just using my charts. Look at that. As soon as it started to go green, you could have bought it. Joel, it can't be that easy. As soon as it started to go red, you should have been selling it. Joel, it can't be that easy. As soon as it started to go green, you should have been buying it. Joel, it can't be that easy. It is that easy. Y'all just be making it hard. All right. Bitcoin rose from, in 2020, it rose from $10,000. Let's go down memory lane. It rose from 10,000 all the way to 70,000 in 1 year. Now, what did I tell y'all? If a stock or an asset, I don't care what it is, if it grows more than 100% in any calendar year, I almost guarantee that in the next 365 days, it's going to drop 50%. Minimum. When the beta is super high, it's going to drop 70%. And it could be the best company on the planet. You guys got to understand these statistics. And you guys got to go out there and say, I don't believe it. Let me pull up these stocks and see what Joe talking about. What would Joe do? Well, Bitcoin rose from 10 to 70. Then it dropped to 10 or 18. I actually called that it was going to drop to 18.9. How did I get that number? Because I've been following crypto for so long, I knew that when Bitcoin drops, it overshoots 50%. So all I did was took out a calculator and said, what's 70% off of 70,000? Well, let's just make it simple. 70 times 7 is what? 7 times 7 is 49, right? So I use 50 as that number. Then I took 50 minus 70, and that's going to give you 20, right? So I said, oh, it's probably going to overshoot that. It's probably going to be 19.9 or lower. Sure enough, we dropped from 70,000. We dropped actually 80% down to 14,000. Okay. Then it started to go up in value right here. Now, I know this is going to piss a lot of people off. I know a lot of y'all going to be mad and angry. And I hope that this continues to go up in price. But when Bitcoin starts to drop in price, this is how it looks. It drops like this before we go to 1 million, guys. It's got to drop 50 or 60%, 4 or 5 times on its way to 1 million, because we got to flush out all the naysayers. And then you got to have new investors come back in and make money. I hope that Bitcoin can run. I'm hoping that it can go as high as it possibly can. People are saying that maybe it can get to 250. If we get to 250, it's going to drop back to the same price that it is right now. I know a lot of you guys are like, well, then why would I get in now? If you're a trader right now and you're holding on to Bitcoin, hoping it can go to 250, ride it out to 250. As an investor, guys, y'all probably got like a year or two where you're going to be able to buy it at the price that it is right now or less. I'm telling y'all this because in 2 or 3 years, when I show y'all this video, y'all going to be like, how did Joe know? He's a genius. He just knows what's going to happen in the future. No, it's not. It's just simple statistics and numbers. It's going to drop 50 to 60% and scare everybody. And people are going to say crypto's going to hell. And then that's when the government's probably going to put money into it. I wouldn't even be surprised if they're already talking about it, because nobody wants to buy anything high. Even back in 2008 and 2009, y'all know that the government got involved when Obama made Warren Buffett his financial advisor. They waited until the market was so cheap and real estate was so cheap that banks ended up buying up other banks. And all during that whole period, the government had their money invested in companies like Bank of America and Citibank. And then they came out with a bill. I forgot what it was called, the Obama's bill, where they flooded money into the market, knowing that that money was going to flow into the stock market. It was like insider trading at its best. The government knew how much money they was going to put into the market, and they knew what companies it was going to flow into, and they knew what companies they were going to bankrupt. And then the market went up in value. The government sold their stakes in all of these particular companies, and y'all are wondering how the heck did Obama's economy go up in value 180% over that 8-year period? Because of your dislike for that individual. Well, you don't think Trump's going to try to take the same playbook? You can't have a market explode in value like that until you get all the naysayers and the weak hands out of the market. So how do you do that? You push the market down, knowing that you're going to put money back into it. They already know it. Okay, we're going to put this amount of money into these different economies, but we ain't buying it up here. Why would we buy it at all time? The market's at all-time highs. Why would we buy it up here? Let's push it down. Let's make everybody think that the world's coming to an end. Let's go in here and print trillions of dollars. Let's be invested in all of that stuff, and let's pour money into all the different industries that we're already invested in, and then we can ride this bad boy out into the end of my term. That's how I see the market. Okay, so you got to position yourself that way. All right, how do you position yourself that way? Well, you got to have a little bit of money on the sideline. You got to have a little bit of patience. You got to kind of know what companies we want to invest in. And when the time comes and the market starts to sell off, go learn how to play golf or something. Do what they did in 2022. They knew that the infrastructure bill was going to come in, and they knew that that money was going to flow into the semiconductor space. But when it was announced, Nvidia and all the semiconductor companies were at all-time highs. They had to push those companies down for a full year, reinvest all that money into infrastructure. And that's how people like myself made a fortune to the upside. That's how you invest in the market. But you have to use charts to kind of know when those time periods are happening. You got to understand the volatility index to know when those periods are at its peak. Okay, you got to look at the market in its most simplistic way and understanding on what it's going to do. This might run to 200. Just using calculations in my head, is probably going to go back to 100 before it goes to 500. And then if it goes to 500, it's going to reverse back to about 250 or 150 before it goes to 800. And then it's going to act like it's going to hit 1 million. Then it's going to drop from 800 probably down to 300 or 200,000 before it goes to 1 million. That's how crypto is going to get to 1 million. It ain't going to make it easy. But you can make it easy if you understand the patterns. And if I got the playbook in advance, I already know what to do. I can hodl. But there's a reason why I was out of Bitcoin. And this is important. I'm talking about this for a long time because, see, I rode Bitcoin from 5,000 to 50. And then I sold. And people are like, how did you know to sell, Joel? Because it got the run everybody was looking for. If I got my 10x, it went from 5 to 50. It's going to take a break. It took a break for 3 years. Joel got back in it at the same price he got out of it 3 years ago. Some of y'all been in it for 3 years crying, oh my God, are we ever going to get back to 50 or 60? And during that time, I'm making money in Nvidia and Tesla and everything else. Okay, so you got to know how to position yourself. Now I'm back in it. Now I'm back in it to see if we can get the 250 to 300. Am I going to pull out again? Probably not. I'm in a different space in my life now where I can hold on to it even if it drops 50 or 60. But I guarantee you, if it drops 70% from where it is right now, I'm going to buy some more, because the goal is that Bitcoin is probably going to $15 trillion in market cap. Let's see where the market cap is today. What is the market cap of Bitcoin? The market cap of Bitcoin, why didn't it tell me? The market cap of Bitcoin, oh, the total market cap is 3.6 trillion, but I don't know why it didn't tell me. But the market cap of Bitcoin is right around 2 trillion. They believe it can go to 15 trillion. That's 7x. That means this can go to 700 grand a coin. There's still room to be made in Bitcoin. And you got a president talking about, I need to make, just created his own coin. He just created his own coin and created another coin for his wife. So if y'all don't believe that he's in crypto, y'all just in denial. All right. Because he gonna make his money. He has hired the richest man on the planet to be a consultant for him, just like Obama did with Warren Buffett. There's a reason for that. Teach me what you know. Well, crypto, if you want to get rich, crypto is the new space. Well, shoot, let's run crypto for 4 years. All right. So I got to try to make it entertaining so that you guys understand it. All right. So Bitcoin does look like a good buy. All right. So I was wondering why you showed up in a suit. oh, yeah, I showed up in a suit because of my picture. You know, I try to match the theme of the show with, y'all know I don't like wearing a suit. All right, we're going to look at GEO. I don't know how we're looking at GEO, but let's look at GEO. GEO, which is GEO Group. Now, it's a REIT, guys. So REIT stands for Real Estate Investment Trust. All right, just by looking at the chart, before I know anything about this company, if I was looking at the week chart or a day chart, if I was looking at this for a as a trade, looks like it wants to run, but it's kind of late. If you were trying to get in this on a trade, you late. You 5, 10, you 15 candles late. Wait for a little pullback. Wait for a pullback. Wait for it to go up in value. If you're buying this as an investment, then are we at all-time highs? No. We were at $49, right? So anytime we're in something like like this stock dropped from $50 to 10, and now we back at 30. So what does that tell you? That tells you that this stock moves. What did it also tell you? What did I tell y'all about a stock that moves 100%? If it moves 100% in 1 year, back from 2007, it ran from 5 to 20, back to 7. Then it ran from 7 all the way up to 17. So what y'all think it was going to drop to? Okay, 9 or 10. I thought it was going to drop to half of 17, around 18, so about 9. It dropped to $10. All right, didn't quite give you the full 50% drop, but it dropped 40%. Then this bad boy went from $10 to $25. So you knew it was going to drop from 25 back to, like, let's see what it's doing. 40. So it looks like this bad boy drops 40%. So when it hit its new high, you should have known just by the last 4 or 5 times it reversed in price, it's probably going to drop 40%. So 40% is going to put you right around the $27 level. So because the 200-day moving average was close, it hit that little 27 area, but it didn't keep going up in price. It started to go down. Now, why do you think it started to go down in price? Because once the 200-week moving average started to go sideways, it's like a It's like an airplane that's taken off and then all of a sudden it goes flat and then it's like, uh-oh. Once that nose starts turning down on that airplane, that's bad news. That's why it couldn't continue to go up in value. So then it dropped. And now the 200-day is starting to turn around. You could have held off on this stock from 2019. For 5 years, you could have been out of this stock. 1 year, 2 years, 3 years, just struggling and struggling and struggling. And now it's starting to turn back around. So hopefully you continue to buy it or dollar cost average. If you didn't plan on being in this thing for 5 years, I hope you learned your lesson. If you're buying it now, I would say it's a great time to get into this stock. But remember, it just ran from 13 to 34. So it's probably going to drop 40% at some point, which is going to put you right around the $20 level. I can probably, if this stock doesn't continue to go up in price, I can probably catch it at 20 because it's made a massive run. It's going sideways and then starting to creep up a little bit. Okay. Roblox. A lot of kids, I was doing a lot of kid courses back in 2020, 2021. A lot of kids bought this stock and they are underwater. But see, the kids are the future, and your kids got time. What do I like about Roblox? What I don't like about it is that it ran from 71 to 140. So we knew it was probably going to get chopped in half to about 70, but then it started to continue to go down in price. Got a lot of people out of it. But what I like about Roblox is that Roblox started to go sideways, and it went sideways from 2022 till now. So for 3 years, it ranged. So, you could catch it at 25 levels, sell it at 40, 25, 40, 25, 40, 25, 40. We finally broke above 40. The rule is once you break resistance, because it couldn't break out of 40. It tried to break out of 40, dropped. 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 Then it finally broke out. This is called a breakout. Not only did it break out, it got a 513 cross while it was breaking out. What usually happens is once you break out, what used to be resistance becomes support. Now it shouldn't go lower than 42. So if you were buying this as an investment, yeah, it's a little high right now. I don't want you to look at this price because I know where it came from. Yeah, it came from 141. I get that. You could probably make a 100% return here, but it's going to give you a chance to get in because look at its charts. This looks like this, which looks like this, which looks like this, which looks like this, which looks like this. This is just steeper, which looks like this. So all of these moves look the same. 1, 2, 3, 4, 5 weeks. 1, 2, 3, 4 weeks. 1, 2, 3, 4, 5, 6, 7, 8 weeks. 1, 2, 3, 4, 5, 6, 7, 8. About 9 weeks. About 9 weeks. 4 weeks, 5 weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is like 13 weeks. So this is really overdoing it. It's probably going to come in a little bit. Maybe it drops from 70 to about, I don't know, 50. But if you're in it, hold on. If it drops, doesn't mean that there's something wrong with the company. It just means that it's going to take a break. It's run for 5, 10, 15 weeks. Let's see what it's doing on the day chart. It broke out. You see how it broke out here, went down in price, gave people a chance to get in, broke out here, sold off, break out here. This looks like this, which looks like this. If I was a betting man, it's probably going to come in a little bit. Okay. But if you're in it, I don't want you to sell it today because Joel says it might come in. You might wake up tomorrow and it might be at $100. But am I going to take a shot at it right here? Nah, I'm going to wait for it to come in because I can always get back in on Roblox. And if you're buying it long term, well, what is the market cap? What is the market cap of Roblox? Remember, if it's $10 billion or less, it's a baby. Anything that's $10 billion or less, guys, those are the stocks that you look for that can give you a fortune. Once it starts getting in that $100 billion range, unless it's involved in AI or something, it's so its market cap is 44 billion. Is that right? I don't think that's right. Let me check. I don't know why I'm messing with Chat GPT. Roblox. I don't remember it being that big. Huh? It was right. 44 billion. I don't know why I'm see, that's what know-it-alls do. I don't believe Chat GPT. Now you done told everybody it's the next best thing since sliced bread, but you don't want to believe in it. Humans got egos. Anyway, Roblox is 44 billion in size. Can it get to 100 billion? Yeah. But once it starts creeping into the 100 billion, 200 billion stage, it's getting too big. Should have been buying this company back when everybody else was buying it when it was like $10 a share. Now it's ballooning in price. Doesn't mean that it can't be a $1 trillion company one day. But you got to make sure that what they're doing supports its growth. I have to find other companies that are similar to it where Wall Street was willing to pay 400 billion for it or 300 billion to see if it can get to that particular price. Otherwise, they're going to have to do something to support why they think they should be valued like a Apple or valued like a Palantir or valued like some of these AI stocks that are getting, hundreds of billions of dollars. Okay. Good question. All right. Charles says, talking about I'm sharp. Look at the let's look at PANW. All right. So we haven't talked about cybersecurity stocks in a minute. So let's look at Palo Alto, which is one of my favorites. All right. Palo Alto, why is everybody interested in these companies? Well, if you have AI and you're talking about putting all this money into AI infrastructure, you have to have cybersecurity. You have to. So who are the leading companies in the cybersecurity space? Palo Alto is going to be one. Okay. CrowdStrike is going to be the other. What I like about this company as a trade is that once Trump came into office and talked about $500 million going into Stargate, well, just like I said, look at what happened. I mean, this is almost textbook what would Joe do method. Y'all see this? Textbook. Goes to the 200-day moving average, 513 cross. You get in within 3 days. This goes green, this goes blue. You start making money immediately. You trade like me, you're going to learn how to get into trades and they immediately go your way. Immediately go your way. Okay? Immediately go your way. And then after about 10 days, then you can decide, can I hold on? Do I want to sell a little bit and then reinvest it? Because I know it's going to come back in. You get in here, it goes up in value, it came back in. You could have got in late. It goes up in value, it comes back in. You could have got in late. Am I going to buy this at the all-time highs? Hell to the no. Rest in peace, Whitney Houston. It gets down to the 200-day moving average. Well, Joel says when it gets down to the 200-day moving average, as an investment, those are the best buying opportunities. But don't take my word for it. Learn how to pull up a chart and see how a stock reacts when it gets to the 200-day moving average. Ooh, Joe, how did you know to buy it there and buy it there? You're some type of genius, huh? How did I know? Joel, it can't be this easy, or everyone would be using this. It is this easy, and everybody is using it, the top 10%. The other 90% is just learning about this today. So get on the winning side. of the trades. Know what to look for. 200-day moving average, 513 crosses. The most basic fundamental way that you can view the market that you're ever going to learn. There's nothing more simple and more basic than that. 200-day moving average is the most used indicator on the planet. You're dealing with a bullish stock. When that momentum comes, you have to use some type of crossover strategy with moving averages to kind of know when that momentum is happening. You throw a trending indicator on there on the top and the bottom, and bam, you become a super trader also. Okay. Great trade. I imagine CrowdStrike probably looks the same way. Except CrowdStrike hit its 200-day moving average. Did I have to buy it here? No, I could have waited until I saw a 513 cross. Can't be this easy, Joel. It is that easy. Oh, man, I guess it went up in value. I can't get into it. Yes, you can. You could have gotten in it here. You could have gotten in it here. You could have got in it here. And you could have got in it right now. And now it's been up for 7 days. You guys trying to buy today because you saw this live, y'all might be a little late. You should have got in 4-5 days ago. Okay. Using the what would Joel do method. Carrie says that was a really good impromptu. I don't know what I said. Tanika said, can we look at raggedy ass Ford? Oh, no, she said, I can't believe raggedy ass Ford made the list. As you can see, she hates Ford. All right, John says, I'm not a fan of investing in the prison system, but comparing GEO from Trump's first term and now. Oh, okay. That's why we were looking at GEO. So I'm somewhat, all right, can you review Wolf? So there's two different wolves. So the wolf that I talk about all the time is not this same wolf. All right. This is a different wolf that everybody's investing in. Now, I'll tell you a little bit about the wolf that I'm buying. So you got Wolf Speed. Okay. But what I don't like about this one is the 200-day moving average is angled down. So you don't want to be around. Okay. So as a trader, you actually should have been trading this to the downside. So if you've been buying this to the upside because of information that you've seen on TV, then you probably want to start using indicators, because I've seen that a lot. People can be very, very bullish about a stock, but the charts will tell you something different. It is up 8% today, but just because something goes up 8% that day, remember, bulls make money, bears make money, pigs get slaughtered. But there are times where the market will go up. But what I want you guys to do is, if you're struggling as a trader, I want you to trade with the trend. The trend is your friend until it ends. Yes. Can you make money here and here and here and here? Yeah, but where's the easy money made? Here and here and here and here. The easy money is to the downside. Okay. Not to the upside. The upside, you really got to be good because you're competing with people like myself. Okay. So you want to make sure that you understand what you're doing. Okay. Now, this is a different Wolf Speed. This Wolf Speed is involved. What is Wolf, the stock? This particular company this company has a market capitalization of 800 million. So it's not even a billion-dollar company yet. But it's experiencing a rise due to significant revenue boost from sectors like electric vehicles and AI. However, some analysts have adjusted their expectations for the stock. For instance, Susquehanna recently lowered its target price of Wolfspeed to $11 to $7. Investors should consider these developments and conduct a thorough research before making investment decisions. So although it's up today, it is involved in electric vehicles, fast charging, renewable energy storage, aerospace, and defense. But in my opinion, I can chill, because it might get a pop one day and then let's say it's down 15% tomorrow. Then all it had was a 1-day up move. All right, I want to see real money flowing into it. So when real money flows into this bad boy, you're going to see a 513 cross, and I see the TTM squeeze going blue. I see that. I see a 513 cross. I'm sorry, I need to see green candles. I'm not going up, especially if the 200-day moving average is angled down. I want to see green, and I want to get in it early, and I want to hold off in case it reverses on me, because it tried to go up so many times and then it reversed. Now, these are some big moves. This $7 to 17. These are some huge moves, but guys, you're going to get moves like this in what I call a penny stock. All right. But I have to say, this penny stock has been getting so much love on CNBC. It's ridiculous. Now, I like this wolf. Okay. So I don't want you guys to confuse it with the wolf that I'm in. This is the wolf that I'm in, which is TeraWolf. All right. TeraWolf helps with, well, I don't like giving definitions. I like to go to Ask Joel GPT. So what is TeraWolf? So TeraWolf, and why I like TeraWolf, is it's a US-based company specialized in environmentally sustainable Bitcoin mining operations. All right, they really, really help with keeping with the mining that's being done with all the cryptocurrency. It likes to bring the energy down because it takes a lot of energy to move Bitcoin or to move cryptocurrency in general. And you need companies like this that uses nuclear, hydro, and solar power in its mining facilities. All right. So I really, really love this because they're really, crypto being crypto growing the way that it's growing. You need companies like this that can help sustain the growth of cryptocurrency. So it's a different wolf, not to be confused with that particular wolf. And its market capitalization is only $2 billion in size. So I like this company a little bit better because it has a bigger market cap. It's not less than $1 billion. I don't really like to invest in companies that's less than $1 billion unless I've done a lot of research. And it still has room to grow to the upside. $2 billion in size, it can grow to $20 billion. I can make a 10x in it. Okay. Wolf also has a very, very small market cap, 640 or 800 million. So even if it grew to 8 billion, it can grow 10 times its value. All right. Two solid companies. Joseph for real talking about me with my suit on. Why y'all talking about me with my suit? All right. Mina says Nvidia calls the 513 cross and it's the 4th day. All right, cool. So let's look at Nvidia. Good old Nvidia. So looking at Nvidia. Now, what I don't like about this trade, guys, is even though the 513 cross, I do not like buying things at all-time highs, period. So Joel wouldn't be in this trade. All right. But it doesn't mean that you can't take advantage of this trade because I don't know what your strategy is. It might be for the day. It might be for one day. Okay. And that's fine with me. But the 513 did cross. The only thing the 513 did cross, this did go blue down here. That is using the what would Joe do method. We did pull back about, let's see how much we pulled back. 153 down to about this level. We pulled back about 10%. That's really not a big move of a pullback for Nvidia. Usually when Nvidia pulls back, it pulls back like 17. You see that 18, 20%. You see when it pulled back over here, it pulled back about 23. So that was a 23% pullback. This was about a 20% pullback. I like to wait and see Nvidia make 20% pullbacks, then start to go up in price and form that 513 cross. I personally wouldn't get in right there, but if you're in it, good luck. But I want you to hold a very, very tight stop. If I was thinking about doing calls, they would be fairly quick. They would be very, very fast calls. If we were looking at Nvidia calls today, you'll notice that they're down in price. So even if I was to go out to the 31st, you see how these calls are down in price. It looks like all the volume is on the put side. Okay, and that makes a lot of sense because it's down 3% today. Look at how much the puts are up, like 600 and something percent. All right, so it was a very good, going off of what you learned in the 513 cross video is great, except I'm not gonna buy it close to these all-time highs. All right, I want to wait for a bigger pullback. Even if you were able to get in here or here, let's look at some of these options. So let's say you were in this option thinking it can go to 153. So you went in there, you bought, let's say you went all the way out to the 31st, or what I teach, the 7th. You went for the one that had the most volume, which is this one right here. Let's say you took this particular option. Let's see what that option did. That option also was going down in value. I also like to put the indicators on my options to kind of see what was happening with them. But I mean, this option 2 days ago, on the 21st, when the 513 cross was happening, these options were $300 and they ran to about $600. So to give you an idea of where these options were, they were 300, ran to 600. That option actually hit 600 earlier this morning before reversing and going down to 288. All right, so be careful. The trend did look like it wanted to go up in value because we did break this particular trend. I like to see the options kind of start going green before I get into those particular options. Let's see what that option did for the day. Let's say you woke up this morning and you wanted to intraday trade Nvidia. Let's do something a little fun. All right, let's look at Nvidia. This morning, ooh, it would have caught a lot of people off guard because look at what happened at 9:45. Man, oh man, this is what you call a fake out, and caught everybody with their pants down. Right? When you see moves like this, it's because the move that you were probably making, everybody was taking Nvidia to the upside because of all the hype about the AI. Okay, that's why a lot of people jumped in on it. If you had a stop in place, you should have been out of this trade and either reversed it and got in on the short, or just take your loss and just be fine with that. And losses happen in this particular game, guys. They just do. You got to be able to withstand the losses. Remember, even the best traders that are out there are only winning 75 to 70. The best of the best are winning at 75. Most good traders are probably winning 65 to 70% of the time. The best are in the 80% range. It's rare you find anybody in the 90 to 100% area unless they're taking very, very rare trades that come infrequently, like buying when the volatility index is above 50. That's like a very, very high percentage trade. But if you're trading every single day, it's no way there's anybody out there winning 90 to 100% of the time, or they're lying to you. All right. So when you see swing trades like this that are losing, take your loss, lick your wounds, get ready for the next trade. If you were intraday trading on this bad boy, you would have taken a loss if you were doing this correctly. But if you were able to jump into this short, you would have made all your money back and more. Just simply, because I can see where people lost money, right? A lot of people probably bought in right there, right around 9:45, 9:50. Within 15 or 20 minutes, you were losing. You should have been out of that particular trade in about 10, 15, 10, 20. You see what the market's telling you it's about to do. And then that bad boy dropped all day long. But you should have known to change once this thing switched like that, and especially when the 20-day moving average started to go down, you should be out of that particular trade. Now, this is in that 60-minute trading video that I put out there for you guys to take as well. But this is intraday trading at its best. Next question. What time is it? Does that say 3:45? All right. Next question. What's the best way for investors to see the new support level as stocks tend to increase in price as the years go on? For example, a year is two ago for Apple was a buy at around 162. Now it's at 220. All right, very good question, right? If you see that a stock is growing in value, what a lot of people will not do is they will not dollar cost average to the upside. The best investors on the planet and the best traders that are on the planet, guys, they dollar cost average up. They don't dollar cost average down. The best way to catch a trend like this is to probably go up one. So, like, let's say you're looking at Apple as an investment. All right. I'm going to use the week chart and the month chart. You're going to have to learn how to buy these on dips or wait until you see the volatility index above 50. So if you see Apple starting to grow in price like this, there's so many different things you can use. If Apple is going up in price, I promise y'all they're not coming back. When stocks start to go up in price, they don't come back. When they go up, they're going to stair step. They're going to do just like this. If you are using the what would Joe do method, the what would Joe do method teaches you how to catch these trends as they continue to go up in price. What I see a lot of teachers teaching is strategies where it goes sideways. Now, if I'm investing in something, why am I buying support levels that are, horizontal when I want, when I'm trying to buy something that's going at a 45-degree angle? That's why I tell you guys a lot of the stuff that you guys are learning does not make any sense. I don't want to trade. I can trade something like this, but I don't want to invest in anything that's going sideways. So if you know that it's going at a 45-degree angle like that, you have to catch it as what we call catching the dips. If you ever hear people say buy the dips, that's how you have to be able to catch these particular stocks. The problem is humans, when stocks start to sell off in price, we think it's the end of the world and that this stock is going to zero every single time. Every single time Nvidia goes down in price, everybody on TV says it's going to zero. It's overpriced. It's going to zero. It's overpriced. It's going to zero. They said the same thing about Apple. We're looking at a month chart. This is from 2009 until now. Apple from 2009 does not give you a chance to get back in. It's going to go up in price, go down, go up in price, but it never comes back to this price. Goes up, comes down, starts to go up. It's never coming back to this price. It goes up, down, up, never back to this price, 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 never back to this price. That's 1, 2, 3, 4, 5, 6, 7, 8, 9 different times pulled down in price. It never came back to where it started. Once the breakout happened, it's going to go up and then it's going to come back about 50% of the move, or Apple's probably going to drop 25% in value. You see how that was almost perfect? Watch this. I'm going to do it again. Joel, it can't be that easy. It is that easy. Joel, nobody's ever broken this down like this because you ain't talking to nobody to invest in the market. Joel, magically it comes to this blue line every time. I know. It's dope, right? When you know what to look for. Look, blue line every time. So, what's happening right now? I can tell you almost to the penny where Apple's going to. Probably $212. Just by using this simple tool here, which is the Fibonacci retracement tool, which I think I put it in the stock party video. It's in the advanced technicals video. Learn it. All right. I can almost to the penny tell you where it's coming to, because this pulled back 50, that pulled back 50, all the way back to 2008, 6. Okay. if you're in a company that's going to have multi-year movements in price, and you guys got to understand, the bigger a company is, I want you to think about this. The bigger a company is, the easier it is to predict what it's going to do. The larger a company is, the easier it is to make money on it. It just is. Technically, they become very, very easy. The smaller a company is, the reason why a lot of you guys have a lot of issue is because you're still messing around with penny stocks. If you're messing around with penny stocks, you're going to lose money. The new penny stocks are options on good stocks. You want to make penny stock type moves, learn the options market, and then start doing options on very good companies. That's how you make fortunes, because billionaires don't want to mess with these penny stocks. That's why you can't figure out what it's going to do. And believe me, guys, I get it. I see stocks that run, 10x, and you're like, Joel, the other stocks don't run 10x. Yeah, because you're not in the options market. If you were in the options market, you will see 10x moves all the time. Stop trading penny stocks. Penny stocks are for, I'm going to say it, and my wife always tells me, don't say this. It's for losers. If you want to lose money, go trade something that's $1 billion or less. You're going to lose money. You might make money 1 or 2 times. I promise you, the next 8 times you try it, you're not going to make money. And a penny stock isn't a stock that's less than $1 in price, or it's pennies in price. Because I can show you cryptocurrency right now that's worth 40 or 50 billion, and they're only 1 cent or 2 cent in price. It's just because y'all didn't know that they were actually worth billions. It's an illusion. That's what the stock market does. It tries to fool the people that are ignorant, that are out there. All right. The bigger it is, the easier it is to figure out what it's going to do. So when you pull out these tools, I can tell you what a 50% mark is. Start, if you're bad at math, use your eyes. Green, red, green, red, green, red. Joel, how do I know when to get back in Apple? All right. Stay in it when it's green, get out when it's red, get in it when it's green. Stay out when it's red, get in it when it's green. Stay out when it's red, get in it when it's green. Stay out when it's red, get in it when it's green. Joel, it can't be that easy. It is that easy. It is that easy. You got to say it to yourself. It is that easy. That's why I have more receipts than anybody you've ever met, because this stuff is easy. It don't matter what stock I trade. It's the same thing. It don't matter what we pull up. When it's red, stay away. When it's green, get in it. When it's red, stay away. You guys got to put the same indicators that I'm using on your charts, and you'll get it from the Thinkorswim chart setup video. And then once you start applying it, trading and investing becomes easy. All right, cool. I can't make it any more clear than that. AMD calls. All right. AMD. Whew, AMD has been a problem child. AMD has been a problem child. Now, when it's green, get in it. When it's red, stay away. When it's green, get in it. When it's red, oh my God, Joel, stay away. It's red, stay away. Depends on your strategy, right? If you're trading it as a swing trade, I want to use a swing trading chart. So I'm going to use the day chart. If I want to take 7 to 10 day trades, I'm going to use the week chart if I want to take 7 to 10 week trades. Well, what's AMD looking like on the week chart? Well, as an investor, I want to buy it when it hits the yellow line. Are we there? Yeah. So if you're buying this for 2, 3, 4 years out, does it make sense? Well, it went to 227. What's half of 227? 113. What price are we at right now? Well, it dropped to 115. Well, half of 227 is 113, 114. Joel says it's going to drop 50%. If it goes up 100%, it has a high beta. So this is expected on a very good company. Could this be the time it turns around? Yes. If I buy it as an investment, then I'm thinking long term. If I'm buying this as a trade, I need the momentum to be going in the direction that I want it to go into. Stop trying to catch a falling knife when you're swing trading. Those types of traders lose the most money in this. Counter trenders in a very trending market are the worst traders on the planet and can never trade beside me because they don't make money. They win every now and then. But if the market moves in one direction 80% of the time, and you trying to trade them 10 or 20% that it reverses, I can't do that. That makes no sense to me. I want to trade the highest percentage in the highest in the right direction every single time. That's going to increase my chances of making money. So AMD has a downward 200-day moving average. So should anybody be buying calls on this? No. Now, if you want to take a shot at it and you want to go against it the couple of times that it does move, well, look at what it did in the past. Like, don't listen to me. Didn't I tell y'all we're going to perform a magic trick today, and that every single solitary stock that's $1 billion or higher are going to have the same patterns almost 95% of the time? They're correlated. If the 200-day is angled down, I don't want to be around. The best moves are going to be to the downside. Joel ain't trading this to the upside. Don't even think about taking a call, because look at what happened every time the 513 cross went off from October. 3 days, 4 days, 3 days. So what you expect this to do? 20 days? And I'm not trying to beat up on Mina because I don't know what she's doing. I'm just explaining my thought process. Why do I want to take this trade? Because Joel, I was reading and AMD came up on Chat GPT. I was using your Chat GPT. It said, it's been some short-term bullishness. All right. Short-term bullishness. Still a bearish stock. Still a bearish stock. Now, on the week chart, as an investment, the week chart is still up. That means this is possibly still a good investment. It's just beaten up right now. So can you counter trend this now? Yeah. But trying to counter trend this now on a 3 or 4 day trade is not the strategy that you should be using. If I'm looking at a week chart, I'm thinking years. So who cares what happened in the next couple of days? If you buy a call option using a week chart, you can't trade with me. Because week charts consist of 7 days. Now, if I'm looking for 7-day trades, think about this. Think about this truly, guys. I'm not trying to make, and again, I'm not going at Mina. This is people that come to me. I see people do this all the time. They're like, Joel, I looked at your 513 video. I'm using I'm trying to take 7. I'm taking 7 to 10 day options. I'm like, okay, you're taking 7 to 10 day options. Great. I teach learning how to get in on the trend, whether it's the first day, the second day, or the 7th day. If I'm looking at a week chart, what's the definition of a week? The definition of a week is 7 days. That means every candle represents 7 days. My trading strategy is within this candle. One candle. All the money that I'm trying to make is within this candle. So how the heck is a week chart going to help me if I'm trying to make money within this candle? I see a lot of y'all doing that. Y'all are using these higher time frames on trades that only last 4 5 days. That makes no sense whatsoever. So if I want to take a 7-day trade, I need to at least be able to see 7 days, and I want to be in early on the first or second day so that I can make money 7 days. So this is not the chart that I'm going to use for a 7-day trade. I'm going to use a day chart. And even if I'm going to take this trade, this is already telling me I have a 90% chance of not making money on this trade, because that's 3 days, that's 3 days, that's 3 days, this is 3 days. If I take this trade today with a call option, I almost got a 90% chance of not making money. Why? Because that's what history tells you. The 200-day was angled down. Let's go back to when the 200-day started to angle down in the past. When the 200-day is angled down, you don't want to be around. It did give you a lucky little move right here. But then when it went red, I promise you, if the 200-day is angled down, this move still going to be longer than this. And then somebody tried to take a call there. Somebody tried to take a call there. Here was a nice little call. 200-day is angled down. So can you make money? Yes. And I'm again, this is for pure entertainment. I rather take these trades to the downside. When it's angled up, you increase your luck, and then you could trade it to the upside. Okay. But now, now I'll throw all of that out the door if I'm able to see AMD options and I see unusual options activity. So if you notice, guys, on January the 31st, there's a whole bunch of options sitting here at the 125 strike. I noticed because everybody's been in my inbox telling me, Joel, you should be buying these options on AMD. Okay. Now, I think it already hit 125. So if everybody's buying the 125 strike, where do you the only way you're going to see Joel buying at a higher strike is if you see unusual options activity at 128 and 129. All the options activity is at the 125 strike. February 7th, 125 strike. February 14th, the most action is at the 125 strike. So if I go to AMD, even if I was taking an option on this bad boy, the highest it's probably going to is 125. And what did we hit today? Well, we hit 125.65 2 days ago. We hit 125.25 today. All these strikes are at 125. That trade is over with. And it's probably about to reverse and go to the downside. All right. Unless it gets a catalyst. All right. The options market is also going to tell you, if I see unusual options activity, I might go against what I see on the 200-day moving average. All right, cool. All right, guys, 3 hours. I didn't get to everybody's questions, and I apologize. I was ranting a lot today. Dang, y'all had a lot of questions. So what I'll do, what's tomorrow? Saturday? I might jump on in the morning and do the rest of you guys' stocks. Because as you can see, my throat is gone. Probably because this tie is too tight around my throat. So I've been going for 3 hours. So what I'm going to do is I'll probably get on early in the morning, maybe 10 o'clock. I'm not going to put all the fancy stuff on. I'm just going to literally go live. I'm going to go straight into the charts. And I'm going to try to answer and look at a lot of you guys' stocks. But I'm going to do it a lot quicker with less rants. So I'm coming to you guys from Decatur, where it's greater. I apologize. I didn't get to everybody's stocks and questions. And I'm out of here. I'm going to go drink some tea and some honey and eat something. I know we got some snow coming next week also. So if we're in and we're abandoned, if we're in the house, because I know I think Atlanta's getting more snow, I'll probably do another video next week. So I'm coming to you guys from Decatur, where it's greater, and I'm out of here. Peace.